today let us start analyzing companies. We know about moats now, basically, from
Yeah.
earlier discussions.
Yeah.
Yeah, so now let's do a fundamental deep dive into thinking fundamentally about how companies work and what's happening essentially, basically.
Mm-hmm.
From a physics perspective, like we always go into first principles thinking. So, from a physics perspective, exactly what is happening, we'll have to understand. Okay.
Mm-hmm.
Okay. Now let's think about it for a second. Let's think about it for a second. Okay. As companies are working, they are essentially trying to produce something
Yeah.
by consuming something less. See,
Right.
on a utility perspective, if they
Hmm.
don't produce more than they are consuming, then they
Hmm.
are essentially burning money.
Correct.
And if this happens for a long enough time, then they crash and burn, go into the ground and go bankrupt, basically.
Right.
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 So whatever is the invested money in the company, with respect to all the investors who invested in it, the
Hmm.
money will kind of crash and burn and be obliterated, basically.
Right.
That will happen
Right.
in general.
Correct.
Now, our theory or our thesis that we are submitting or thinking is that out of the 7,000 listed companies, okay, just do a Google search. How many companies are listed publicly on the Indian stock market?
Uh,
Yeah, yeah, first
Around
link.
2000. Around 2000 in NSE. That is just NSE.
Yeah, that is just NSE total.
Total of over
Yeah,
6,800, like you
yeah,
said.
7,000. I told you 7,000 basically.
Yeah.
Around 7,000. Okay.
Yeah.
Yeah. So around 7,000 are listed as of 2023. I would take it. So our thesis is that 6,000 of these 7,000 are committing accounting frauds, basically.
Hmm. Okay. Okay.
That is the thesis. So they are not even reporting correct numbers. They are embellishing and increasing and expanding the numbers, basically, sometimes even
Hmm.
beyond reasonable means.
Okay.
So
Right.
there is this Indian startup, Byju's, which was supposed to be the most valued Indian startup, and that
Right.
kind of crashed and burned a lot, basically,
Hmm.
because of wasting investor money, right? So
Right.
Byju's apparently has raised total, I think, $6 billion or something like that till date, and that's a billion with a B, right?
Hmm.
And they are currently valued at $4 billion by some investors, at $3 billion by some other investors, etc. Basically, right?
Right.
So having done that, that is like a colossal loss-making situation, basically, right?
Hmm.
So just Google like Byju's downfall. This is actually live news kind of a thing.
Yeah.
Yeah, this is like 23 July.
Yeah.
Hmm.
Yeah. It was valued at 22 billion earlier.
Hmm.
Hmm.
See, they had signed up Shah Rukh Khan for an annual fee of 4 crore rupees, basically.
Yeah. Yeah.
And now some people say $5.1 billion, and some people say 3 billion, some people say 2 billion, etc., etc., etc.
Hmm.
Yeah. Anyway, that's fine. So now here I would like to comment something. This is what leads to funding winter and things like that. So I would like to comment something basically.
Hmm.
The comment is that most companies are burning money. This is the comment basically.
Acha, okay, okay. Only most startups, or are you talking about most money, most companies,
See,
even public?
97-8% of startups might be burning money. And
Right.
see, 6,000 out of 7,000 companies are committing accounting frauds, basically. So you
Mm,
don't have to commit accounting frauds if there is something, if there is everything in place, basically. Only
right,
if there is something amiss and very, random, then only you have to commit accounting frauds, basically, right?
right, right,
In general, like how Byju's also had to commit accounting frauds and things like that. So that is like public knowledge now, basically. I don't need
right,
to go deep into
right,
it, basically.
right.
Right. So essentially speaking, the
Hmm.
first order of filter has to be this only, na, dishonesty and accounting frauds
Correct.
while selecting the companies, basically. That has to be like the first order of filters. Okay. So you
Yep.
can Google a book called Financial Shenanigans, basically. We should
Okay.
discuss in one of the future podcasts, we should discuss,
Mhm.
hey, this is Yahoo. We need to Google
Arey,
basically.
हाँ. One second.
You can even take a moment and change the default search engine or something like that, basically.
Yeah, one second. Um,
Yeah, there only, there only.
the
There,
settings में होगा ना? हाँ.
yeah, correct. Financial shenanigans, right?
Okay,
So
okay.
this book kind of tries to summarize what all accounting frauds can be done, basically.
अच्छा, okay.
Like some of the things that are there is like reporting future revenue as current revenue,
Okay, okay.
reporting current costs as already paid costs or future
Future
costs,
cost, okay.
taking one-time sales of equipment, plant property, vehicles, etc., and adding them to revenue because this is a one-time occurrence, right? They should not be added to the revenue. For
Hmm.
example, let's say when COVID happened, we ourselves sold a lot of office furniture because now we no longer needed offices, right?
Right,
So
right.
if I add this as my one-time, one-time revenue, then
Hmm.
that year's revenue is going to seem embellished, basically, right?
Correct, correct, correct. Yes.
It's going to seem okay. Then, misrepresenting depreciation. So, government generally has a recommendation, and in general, there is a particular life cycle of an asset, basically. Okay.
Okay.
So, let us say, for example, a car usually lasts for 10 to 15 years, basically. So,
Hmm.
if a company owns a car, then in order to, if they want to reduce the profit and tax liability, they can show the depreciation in 5 years only. So,
Hmm.
they are saying that okay, on year one, I bought a car for 10 lakh rupees, and on year five, it is the value is zero. So every year they are reducing 2 lakhs from their tax liability, basically.
Hmm.
So
Hmm.
this is the meaning of depreciation in general,
Right,
right?
right,
These are some of the shenanigans that can happen, and we need to kind of look at the balance sheet and carefully scan through the income statement, etc., in
right,
order to understand what are the financial shenanigans that are done, basically,
right.
in general. And
Hmm.
in India, what has happened is maximum companies,
Hmm.
including public companies, okay,
Right.
are owned by family enterprises, basically, most of them.
Okay, okay,
So
okay.
there are
Right.
only very few companies. There are only very few companies that are not owned by family enterprises, basically.
Hmm. Okay, okay.
But the ones who are not owned by family enterprises have a slightly higher probability of being meritocratically successful, basically.
Got it, got it.
That's the thing. Yeah. So I think the first filter has to be financial shenanigans and
Right,
accounting frauds.
right.
So basically, this is something that Warren Buffett has never talked about. If you think about it,
Hmm.
we see. Okay, he must have talked about it in Berkshire Hathaway annual meetings and annual letters for sure. I'm
Right.
sure about it, but he has not talked about it much in public
Public.
talks or
Yeah.
things like that. Basically, right? Maybe
Yeah.
one of the reasons might be that people don't find accounting interesting. That might also be the reason. But
Mhm.
you can see that by intent or without intent, he is also kind of securing information, basically, right?
Right.
He is not letting every single piece of information out there, basically, for the masses
Hmm.
to consume. Uh,
Right.
Probably because of trying to maintain competitive advantage or whatever, basically. We don't know. We
Right.
don't know what goes on in whose mind and things like that, basically, right?
Right.
He
Right.
did a very good, fantastic job by donating 99% plus of his wealth. For
Hmm.
sure, that's like extremely commendable, basically. But then again, he invested in Coca-Cola also, and not only that, he advertised the products as well, basically.
Right. Right. Right.
So that's kind of an issue, basically. Okay.
Right. Right.
Yeah, okay. So, overall, the first thing has to be accounting frauds, basically. So, try
Okay.
to detect accounting frauds and then try to stay away from such companies that have committed accounting frauds or are likely to commit them in the future, basically.
Hmm.
Right. Yeah. So this definitely has to be first. Then, after that, the second thing is that long-term viability of the market. If you remember, we have kind of gone through this small checklist basically last in the last podcast.
Okay.
Long,
One sec.
yeah. The second one is long-term viability of the market. You have written it down also.
Yeah. Yeah. Accounting efficacy. Correct. Correct. Business viability and macro. Long term. Long term
Long-term, yeah.
viability.
Long-term viability, business viability in general. Yeah, long-term viability of the product and service. Okay,
Yeah. The
that is
TAM, SAM, all of it.
yeah.
Yeah.
Correct. That is point number two. And point number three is actually
Management.
moat,
The
right? Management. Yeah, management. So
uh,
basically, management and moats, etc., are in no particular order because
yeah.
if let's say there are a lot of moats, basically huge moats, then management can be weak. If moats are not there, then the management has to be very strong. Things like
Right.
that,
Makes sense.
basically.
Makes sense.
Management and strategy also has to be strong, basically.
Right.
So management, moats, and something else we might have. written down. Maybe in cahoots with power structures, basically. Maybe the fifth point was also there.
I think so. Resonance with the government as a sixth point is there. Fifth, mein price considerations, margin of safety,
Yeah,
opportunity
margin
cost.
of safety cost. Yeah. This is,
Yeah,
in fact, an excellent checklist basically to get started.
yeah, yeah,
Basically,
yeah.
and like this is where we build on from, basically, right?
Hmm. Hmm.
So apparently,
Hmm.
according to some analysts that I studied,
Hmm.
uh, there are only around 20 to 30 companies in the Indian stock market that are generating 80+% of the profit of the Indian stock market, basically.
Acha, okay, okay. Right.
So these are the only profit making companies. So now let's look at this from a very theoretical perspective, basically,
Okay.
right?
Hmm.
So that actually means that most of the companies are making a loss.
Hmm.
Now, how can the stock market sustain, or how can the enterprise, the company sustain where it is still making a loss? How can it sustain? Okay, let's
Hmm.
understand. All right.
Right.
So typically let's understand the use case of Byju's, or take this example of Byju's because it is very blatant. It's a very big, humongous failure, basically. Okay,
Right.
a
And
very
it's an extreme example of what? That's what you're trying to say of burning
yeah,
money.
extreme example in the Indian market, basically.
Right. Right.
The largest example in the world is called WeWorks, basically. Similar
Oh,
cash burn situation and failure, basically,
okay.
right?
Okay.
So
Okay.
WeWorks also failed very badly, but in the
Hmm.
Indian stock market, Byju's is one example, basically.
Right. Right.
Right. Okay, so essentially, who is losing? So because what we are saying is money is being lost. This is what we are saying, right?
Correct.
Money is being lost. So
Huh.
who is losing? The simple answer is investors who invested money, they are losing. Simple.
Correct. 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 Correct.
So Byju's has raised apparently 6 point something billion dollars. See, I,
Hmm.
I am not privy to like their private information. So I can only know kind of whatever is kind of written
Hmm.
in tabloid articles, etc., which
Right.
may or may not be accurate, but seems like ballpark accurate figures
Hmm.
from other data and things like that. Okay.
Right.
So
Right.
6 point something billion dollars, or so let's assume as a round figure $7 billion, and
Hmm.
recently they also took a debt of $1.2 billion.
Okay.
So
Okay.
overall they have raised $8.2 billion, some in debt, some in convertible, some in equity, so on and so forth,
Okay.
right?
Okay. Okay. Right.
So,
Right.
so they have raised this much, and currently the company is valued by some people at $5 billion, by some people at four, and in the future it seems that it will even go down, basically.
Hmm. Hmm.
Right.
Right.
So
Correct.
let's assume that the company has kind of assets on paper for worth $3 billion, and some sales and potential to do sales, etc. Because the brand image has become extremely negative already, basically.
Right.
So let's assume though that the net assets minus liabilities still the shareholders' equity still amounts to $3 billion, and it's present in the company.
Okay.
So
Sure.
now look at what happened here. $8.2 billion were raised. There are a lot of liabilities now, including interest payments. Court cases are also there to be settled, etc. And $3 billion is the value. So what
Right.
happened here? Like there was a huge wipe. There was a huge wipe of some $5 billion or so, basically $5.2 billion, right?
Okay. Okay. Huh.
Yeah. So this is a very important, extremely important example. Okay. Uh,
Hmm.
continuing with the loss making situation of Byju's, just go to the new tab basically and open YouTube and say Byju's loss basically.
Huh.
YouTube, on YouTube you will see
Yeah.
there are
Okay.
many videos, but there is like a particular video that I recently saw. They detail their loss extremely well, actually.
Okay.
Yeah,
Byju's laws, huh?
Byju loss. Yeah. Just a second, wait.
Hmm. These two.
I need to. I know. No, it may not be. No, this not this one.
Okay. Huh.
No, not even this one. Let's go down. Wait a second. The fall of Byju's is a normal thing.
Acha.
That's like a normal video. Okay, you can just open the fall of Byju's on in the new tab.
Hmm.
No, new tab, new tab. We still need to see other videos. Just go down I hope I'll be able to find that video because that fellow has explained it very nicely.
अच्छा, अच्छा.
Yeah, just let's go down. It might be that Aditya Iyengar fellow only. He has a video up above, right? For all of pages.
अच्छा,
Aditya.
oh, okay, okay. हाँ, अच्छा, you think it might be him, huh?
हाँ
हाँ, गया आदित्य अयंगर, हाँ, ये वाला ना?
हाँ 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 हाँ. Yes, I think yeah, this is it. This is it. This is the video.
Okay,
Yeah,
okay, 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 okay.
yeah, correct. So I would want you to watch this video, maybe at 2x speed or something like that, and
Mm-hmm.
then I would want you to think basically what's happening in the general startup ecosystem in the world and in India as well.
Right, okay, okay.
Hmm.
Um, so
Hmm.
before I start this also, matlab, so far the idea I have is that anyway, investors also they invest knowing that 7 out of 10 companies that they invest in will just go bust, right?
Hmm.
So
Hmm.
maybe they tell themselves that it's okay for Byju's. I mean, obviously they don't think fraud is okay, but
Hmm.
they do think it's okay for some companies to burn and crash
Hmm.
because they are more interested in making a return on their this thing quick, right? So they want that one company in 10 to give them outs or one company in 100 to give them super outsized returns,
Hmm. Hmm.
but they're willing to let money burn in many other things. So I don't know what to think about that from an ethical standpoint also, but
So
at least.
another thing is this that
Hmm.
also understand that all investors don't lose. It's particularly the last round of investors that loses. Please understand
Makes
here.
sense. Makes sense. True. True.
So
True.
they might not be thinking that I want to go from 1x to 10x in
Hmm.
one company. They might be thinking that I will make a quick buck because I am in one of the early rounds, basically. And I'm sure,
Right.
see, sometimes they might not be even betting on the success of the company, but
Right.
only betting on the success of the next round of
That's
investment,
like a
basically.
typical Ponzi scheme thing.
Yeah,
But
typical Ponzi scheme
yeah.
thing, basically, right?
Okay.
So,
Okay.
like,
Right.
मैं मेरा पैसा निकाल के निकल लेता हूँ, basically. That's it. Like, I'll take my money out and I'll run away, basically. That Ponzi
Hmm.
scheme kind of.
Hmm. ठीक है, fair point. Yeah. Yeah. So
So
early
this is the
stage.
thing. Yeah, so early stage investors still make money even if the company is completely in losses, basically.
Right.
It
Right.
is the late stage and especially the latest stage of investors that lose the money. So happened in the Bitcoin bubble also, right? Basically.
Hmm. Correct. Correct. Correct.
So
Correct.
in the Bitcoin also, people who actually came in later are the one who are going to exactly lose the money, basically.
Yes. True. True. Correct. Yeah.
Let's understand. This
Yeah.
always happens in bubble-like situations in the stock
Yes.
market and
Right.
in buying also. No, the interesting case study for me or for us is that if
Hmm.
these many companies are losing money, how are even we as humans sustaining basically?
Oh, yes,
So,
I had some questions around that. So I still didn't get that. Most
hmm,
companies, most startups, I can understand because we literally, I mean, they can't even show it in spite
right.
of all the financial shenanigans. They still can't show
They still
profit.
can't show profits. Basically.
But
Yes.
for the big companies, I was wondering, like, how do we know that the financial shenanigans are making it seem like a profit when it's actually a loss? Maybe it's just that it's a small profit and they're looking to
Yeah.
show it as a bigger one. But
So
maybe,
because see the incentive is for early investors and founders to
uh,
commit this financial shenanigans so that they can exit with their equity, right?
right, right, yeah, yeah,
uh, and dump the shares on the public. So
correct.
from a physics perspective, what is happening?
Hmm.
Humans are trying to harvest Earth ultimately, right?
Hmm, hmm,
Harvest
hmm.
Earth using energy,
Correct.
which is ultimately solar energy stored
Correct.
inside Earth, basically, mainly,
Yeah.
right? So
Yeah.
this is what is happening. So
Hmm.
all the small investors, okay. Now I'll tell you how a small carpenter who doesn't even know anything about the stock market, as
Hmm.
soon as he uses the bank account, he is now an investor, basically. Think.
Okay, because yeah, the
Because
bank
yeah,
on, yeah,
he deposits in the bank and
right.
then he gets 4% like
Correct.
4% per annum kind of interest, like very less below inflation rates interest rate
Hmm.
basically.
Hmm.
And then on his money that he has deposited in the bank, and the
Hmm.
bank later invests it for higher return, right? And
Hmm.
mind you, the bank also does get higher returns as long as they exit in time and are
Hmm.
not the last investors of all these Ponzi schemes, basically.
Right, right, right. Okay.
So
Makes
the
sense.
money, so the money flow is like this. Let's say there are 100 investors, and
Hmm.
let us say five of them are last round investors, basically.
Okay.
Let's assume, let's assume that all of them kind of invest, let's say 1 CR. Okay.
Right.
Investor number 1 to 100 invested 1 CR. So
Right.
that so basically what's going to happen is the 5 CR of the last 5 people is going to get redistributed in a weighted manner. The early investors will get, the early investors
Mm-hmm.
will get more of that 5 CR amount basically. And the
Mm-hmm.
later investors will get less of that 5 CR amount. Okay.
Correct. Correct.
Now, if the latest investors, if the stock value has been pumped up, basically, yeah.
Mm-hmm.
So for getting the same amount of equity instead of 5 CR, the last 5 investors may have to invest 500 CR also. And
Mm-hmm.
whereas on an average, investor number 1 to 95 has invested only 1 CR. So
Mm-hmm.
maybe you consider this as two groups. One is kind of the winning group here. So 95 CR invested by them, and one
Right.
is kind of the losing group. Five of them invested 500 CR, 100 CR each on an average. All
Right.
right. And they kind of lost money on this deal, basically.
Right.
How? Because the company busted. But
Mm.
then these fellows got back their 95 CR and additional money.
Yeah.
So essentially, the last round of investors, and usually it is public, right? The public are
Mm.
usually the IPO last
Correct.
round of investors, right? So you can see how Zomato share price tanked after the IPO. You can
Mm.
see how Paytm share prices tanked after the IPO.
Right. Right. Yeah. Yeah.
Nika is a similar story, basically, right?
Right. 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 Yeah.
So what we are saying is savings of the last round of investors are being wiped, and
Right.
it's kind of a game basically, wherein which hedge fund managers, even
Mm.
some retail investors, and especially large hedge fund managers, etc., and banks are playing this game of investing in the stock market and just not being the last person in basically.
Mm-hmm. Right.
So as long as they are not the last person in, they are kind of at least not losing that much amount of money. You can say
Mm-hmm.
that way. So basically, fraudulent companies or inefficient companies lead to value destruction, and the value destruction is like extremely weighted in the favor of, or rather
Initial.
against the last person, in the
Correct.
favor of the initial investors, and value destruction is like weighted towards the last person. Okay, I use
Yeah.
the word
Same.
value destruction, so we,
Huh.
we we will not use in the favor of initial person. That's not
Huh.
relevant here.
Yeah. Correct.
So
Correct. Huh. Right.
yeah, value destruction happens especially for the last investor or the
Hmm.
last set of investors basically, that way,
Right. Right.
right? So it is their money that is kind of getting burned basically. So people
Mm-hmm.
even sold their houses and bought bitcoin, and they crashed basically, the bitcoin crashed basically.
Right.
So
Right. Ouch. Okay.
yeah, so this is the context. The idea is that essentially speaking, uh, money is being lost by most startups and most companies. Then even before we start, then fundamentally how is the economy surviving? If money is being lost by most startups and most companies, then fundamentally, how is the economy surviving?
Yeah, so I want to kind of understand that bit also before that question, which is the
Yeah.
obvious that comes next. But uh,
Hmm.
so startups, I understand. Like I didn't understand the that 6,000 out of 7,000. Why
Hmm.
we say they are losing money? Because even if they do financial shenanigans, maybe if you oh yeah,
Maybe they
what
might not be
contributed
losing money, but they might not be as profitable as they are
as
showcasing.
profitable, huh? Like that, yeah, yeah.
Yeah. So maybe a 5,000 out of those 6,000 doing shenanigans might not be losing money or might be also, but
Okay,
they might not be as profitable as they are
correct,
trying to show
correct,
basically.
correct, correct, correct. Huh. That's what we can say. Even I've heard a lot about that. The prevalence of financial shenanigans being there. And
Hmm.
I think
But
you
but
also
what see basically a company that can be a good company as a founder may not be a good company as an investor basically. Please understand. So
right.
it might be a good startup for the founder, but it not be a good company for the investor. And
Correct,
also
correct.
because we don't know where we are on the JS and then after that plateau curve,
Yeah,
right?
yeah,
Basically.
correct, correct.
The JS and after that plateau curve, then again may become JS and after that plateau.
Yeah.
Again it may become JS or it may go down and the company might die basically. Anything can happen. Yeah. So
Correct,
that
correct.
depends upon, so we don't know where we are. So
Yeah,
a great business can be a bad investment.
yeah, yeah.
A bad business can be a great investment. Let us say
Right.
there is,
Yeah,
like Berkshire Hathaway itself is such an example. Berkshire Hathaway itself is, I think, a textile business which was not doing very well.
yeah. Right, right.
They
Okay.
just they just bought it. So basically, it was a bad business, but it was a good investment because it was selling very cheap
Very
compared
cheap.
to the book value, basically.
Right, right.
even compared to the book value, it was selling very cheaply, basically,
Right.
right?
Okay. Right.
That way.
Right.
So the overall funda over here that we can take away is that we have to think differently about investments compared to
Mhm.
businesses, basically.
Yeah.
And in investments also, there is different thinking when it comes to short-term investments versus long-term investments.
Correct.
Yeah. So
Yeah.
basically, the way in which I classify in my mind is like very short term is like intraday or a week or month, basically. That's the time horizon of like very
Very
short term.
short term.
And then the next time horizon is like few months, typically 6 months.
Hmm.
Then the next one is 3 years, and the further one is 10 years, basically.
Hmm.
So this is like mid to long term, basically, you can
Okay.
say. Right?
Okay.
So
Six
even
months.
6 months, 6 months holding is also kind of a mid-term move,
Midterm.
basically.
All right.
Yeah, that kind of a thing.
Okay.
So essentially speaking, after COVID, the stock market completely crashed, right? And
Hmm.
for 6 months or so, it was down only,
Yeah.
relatively.
Yeah.
So that was a good time to buy, basically.
Yeah.
Correct. In
Yeah.
general, things that was a good time to buy things in general, basically.
Correct.
All right.
Correct. Correct.
So the strategies that depend upon momentum, namely the trading strategies,
Right.
intraday, weekly, and up to a month or 2 months, etc. Right? So these
Uh-huh.
are short-term strategies. They depend more upon the momentum, less upon the total overall opinion about the company's future. Right?
Correct.
Future cash flows, discounted cash flows, etc. They don't affect or matter
Correct.
that much.
Correct.
Yeah, compared to the momentum, the way in which
Momentum.
the momentum of the company is
Yeah,
going on.
I think even philosophically, they just believe that that is already the future. This thing, future prospects of the company is already baked into the price, the average price of the moment. I think that's their philosophy anyway. So
Yeah,
right, for technical trading, huh?
yeah, for technical
The
trading,
analysis, yeah.
but I think you said it wrongly. If in technical, this is not the philosophy. In fact, the future cash flows are not taken into consideration only in technical trading.
No, I think what they wait. No, from what I
In
understand,
well,
the philosophy is that forget about the fundamental analysis because all
yeah,
different opinions are baked into it, and that is why it is around that price point in
yeah,
the
but
first place, but
yeah,
now
yeah,
it's
yeah.
more.
The right way to say it would be not future cash flows, but
Okay.
current market perception about future cash
Correct.
flows,
Correct.
basically.
Correct. Correct. Yes. Yes. Correct.
So
Yeah.
when
Current
we
market.
talk about real future cash flows, then we
Hmm.
talk about value investing, which is exactly opposite of
Hmm.
trading. Like
Hmm.
uh,
Hmm.
quite different from trading. We can say not exactly opposite, but quite different from trading.
Correct. 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 Yeah. Yeah.
So all we worry about are future cash flows, basically, as far
Hmm.
as value.
Yeah.
So the
Yeah.
checklist that we have generated, including the one of financial shenanigans and
Hmm.
everything like moat management, etc., like long-term competitive
Yeah.
advantage,
Yeah.
etc.,
Yeah.
long-term prospect for the business, and then margin of safety, price, etc. Right?
Hmm.
So this entire checklist and all things associated with it are
Right.
with are with respect to the longer form of investment, like 6 months, three to
Yeah.
5 years, like
Correct.
six
Correct. Correct.
months. Yeah, 6 months to 1 year is like one time frame. 3 to 5 years is another time frame, and then the third time frame is like 5 to 10 years, basically that kind of
Yes.
thing.
Yes. So in general, I mean, like this entire podcast series also for like long-term orientation, creating value, and value investing as such, really long-term orientation.
Yeah, in general, yes,
Hmm.
but we may also do one or two episodes on very short term or trading or things like that,
Right.
basically.
Right. Okay.
Whether just to kind of understand whether that makes sense or it's
Hmm.
totally nonsensical, basically, or can
Makes sense. Makes sense.
can
Yeah, we should
can
do that also.
can some reliable profit be made out of it or not at all, basically,
Got it. Got it. ठीक है. Got it.
like that kind of a thing. Yeah,
Got it.
all right. So I think
Hmm.
yes. So this is something that I wanted to say. So now let's look at the fundamental question as to if so many companies are losing money, then
Hmm.
how is the economy getting sustained, basically?
So when it's being burnt, does it just transfers hands, right? Like if the last investors are losing money, but that means the first few investors are making money. So I guess it's just a redistribution rather than like literal. But then it is wasted effort also. From companies' activities are just wasted energy. So yeah, that's
Yeah.
these are things that come to mind. Yeah.
Okay. The first thing that you said is quite good, basically. The money is getting not exactly wasted but circulated, basically.
Right. Right.
It's kind of going to the last investors to the first investors, basically.
Right. Right.
Remember, from a physics perspective, money circulation or the frequency of money circulation just corresponds to more and more GDP, which is another way of saying that more and more energy is being utilized by humans,
Correct,
basically.
correct, correct, correct. Oh yeah, so even if a company burns, but then it paid its vendors or it burnt it on
Correct,
something, so it
correct. So that
redistributes
money got
whatever. Yeah,
got
yeah.
back into the economy somehow, basically.
Correct, correct, correct.
So
Yeah.
who made a loss? The last set of investors made a loss,
Yeah.
basically.
Oh, right. So the last set of investors are paying for the
For all
stimulation
of
of
them,
economy for everyone. Okay,
e-
okay, right, right.
exactly. So nothing much is happening except the last set of investors losing money, basically. That is what is
Right.
happening.
So then,
Yeah.
Zenith, then from the perspective of purely from the perspective of energy flux, is there much
Yeah,
of a difference between a company that succeeds and a company that does not succeed because they're both creating business or creating value creation for somebody, right? Like a company that goes bust created value for all the people that charge them at least for whom they were a customer, like the vendors or wherever they spent money, right? Or
correct. So your argument, or rather the thesis that you're proposing right now, and
hmm,
like we will be examining it in a moment,
cautiously, huh?
is
Yeah,
it so that the company is still creating value for some people, basically, even if
huh?
it does
Yeah,
not. Is
yeah.
that the thesis that you're proposing?
Yes, yes, yes. Huh.
Yes. So if it does not create value for anybody,
Hmm.
okay, then it's like a criminal enterprise that will be shut down quickly, right? Think about it. If it does not create
Hmm.
value for anybody at all,
Hmm.
not for its employees, not for its founders, not for its clients, not for its vendors, not for the
Right,
market at large, not for the government, not for the world at large. If it
right,
is
right,
not at all creating value for anybody, then it
hmm,
will just be shut down very fast. Think about it.
right, right. Correct, correct.
So it is not even a value creational entity basically at that point in
Hmm.
time. It's a
Hmm.
value sucking entity. So
Right,
because of that, it will be shut down very very fast essentially, right?
right, right. Yeah, yeah.
So, as it so happens that value is definitely going to be created for some or more of people, and
Hmm.
then it is going to be okay. So, in case of Byju's, right, the employees are also suffering because they have very heavy sales targets and they kind of do things like this. Ki, in order to save the job, I will kind of borrow money and show sales targets are completed, basically.
Right, right. Okay, okay, okay.
So it's like if let's say salary is 50,000 and sales target remaining is let's say 30,000, then they'll take
Oh,
30,000 from here there, complete that sales target, and in that month basically they will effectively gain their 50,000 and give back that 30,000 to whomever they
got it.
got the loan from, and they will be satisfied with 15,000 only for that month and
Mhm.
argue like this that okay, some job is better than no job in especially in a recession type environment basically. So I'm
Mm-hmm.
at least being able to earn 15,000 instead of 50,000 basically
Right.
by doing such kinds of cheating basically. Right. That kind.
Mm, right, right.
So essentially speaking, what's happening over here is the last set of investors is kind of getting dumped upon basically, mainly.
Correct, correct. Yeah, okay.
That's like the main thing that's happening basically. One of
Right,
the main things that is happening basically.
right.
Right. So yeah, destruction of value as such is when some property, plant, equipment gets destructed, or let's say some car
Mm,
wear and tear, basically wear and tear, and destruction of property, basically pretty
right,
much.
right, right. Got it. Yeah, yeah,
Like
yeah.
for example, I think they burned the library in Alexandria, so that is like real destruction of property,
So
basically.
can I take a few scenarios? Like, can we
Yeah,
explore
sure,
what is
sure.
like for so
Under
one thing. So here we talked about destruction of physical property. What if I create with a team of developers
Ah.
an app which nobody uses, but then the developers, I guess, got paid, so they got value.
So some value was created somewhere, basically.
Mm-hmm.
In the value chain, some value got created somewhere because the
Right,
developers got paid. So
right,
it is just about how much resources you consumed and how much value you created, basically.
right,
So
right.
so
Hmm.
this is entrepreneur's job is to create much more value compared to the per unit resources consumed. So
Right.
value creation per unit resources consumed should be the highest, basically. This slope should be the highest. If you try to draw on the y-axis value creation and on the
Mhm.
x-axis,
Who are you drawing?
res-
1 second, 1 second.
no, I'm not drawing. I'm not drawing.
Oh, oh, sorry, sorry.
Yeah,
Huh.
I'm just like describing right now.
Huh, huh.
on the y-axis, if we have value created, and on the x-axis, we have resources consumed. We
Right.
want value created per unit resources consumed, this slope to be the highest, basically.
Correct. 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 Okay.
Hmm.
Hmm.
Think
Makes
about
sense.
it. Okay?
So it's also like a system, right? Because now here, so I mean, now we've been discussing about how value gets created somewhere, but as a company, if you want to succeed, then it's like, yeah, like you said, whatever you're consuming, if that's like an outward, like if you quantify the value being, sorry,
Yeah, flux is a good
flux.
way.
Oh,
Value
flux.
flux is a good
Correct.
way.
Value flux. Correct. Yeah. Yeah. Okay.
Value flux. So
Uh,
the in value flux has to be much more than the resources consumed, basically.
yeah. Yeah.
Yeah,
Right.
yeah,
Right.
consumption flux, you can say. Value
Correct.
flux has to be much more than the output value flux has to be much more than the input consumption flux of resources.
Right. Right. Okay. Okay. Got it. Got
If that is the case, then the company stands a very good chance to succeed.
it. Got it. Yeah. Yeah. Yeah.
Otherwise, there is a very good chance to fail also, essentially.
Hmm. Right.
Now, since resources are being consumed, right?
Hmm. Hmm.
Since resources are being consumed,
Right.
we can say that somewhere somebody, like, let's say there is a corrupt politician whom the company officials bribe in order to get some contract or something. So value is being created for him also, basically,
Yeah. Yeah.
right? So bad companies, what they do, they loot from the final set of investors and give to the corrupt and the thug people, basically, the thugs,
Hmm.
basically.
Hmm.
And good companies make money for the final end investor, basically,
Hmm. Right.
and keep making
Keep
money,
making. Right.
essentially.
Right.
Right now, so it is just about shifting off claims on the energy flux. Now, I'll give you an example.
Yeah.
Let us say let us say there is a pension fund. So this is a fund for people from age 62 till death. Let's assume average death happens at age 90. So for 30 years, they need some food, income, shelter, Medicare, etc.,
Right.
etc., etc. So some expenses will be there for them, right, for these 30 years, correct?
Yeah. Yeah.
So essentially, there are companies
Hmm.
here
Hmm.
that invest the pension funds money in
Hmm.
some shady scheme, etc., and lose the money, basically, let's
Correct.
say.
Correct. Huh. Right.
Shady or kind of financially dopaminergic scheme kind of a thing,
Yeah.
and
Yeah.
lose the money. So what will happen is that the pensioners who wanted and according to them deserved the pension fund, etc.,
Hmm.
for them the value destruction has happened for the next 30 years, basically.
Right. Yeah.
Right? So the energy flux that they were going to have will now instead be directed to the corrupt politicians and the
Yeah.
corrupt founders, let us say company officials, etc.,
Correct.
who did
Correct.
who did the corruption, basically.
Correct. Correct. Yeah.
Because fraudulent reporting of financial statements is akin to government corruption only, if you think about it. It's akin to
Mhm.
government corruption,
Mhm. Yeah.
fraudulent
Yeah. Yeah.
reporting,
Yeah. Yeah.
basically.
Correct.
It's kind
Huh.
of fooling the market, fooling the masses, etc.
Right.
Especially because there is information asymmetry here, right? Because
Mhm.
masses are not present in the
Yeah.
day-to-day operation of the company. They
Yeah.
don't have the know-how about the extreme working and details of the day-to-day operations of the company, essentially
Right.
speaking.
Right. Correct.
So, because masses are not that aware, they can be taken advantage of.
Yeah.
Right? So that's why,
Hmm.
like, it is important to understand that essentially flux is only shifting. Flux is shifting. Think.
Hmm.
Flux is shifting.
Right.
So so pensioners might have had that flux of because of money. They might have
Right.
enjoyed the energy flux. Now
Right.
it is shift. Now it has shifted to the corrupt people who
Correct.
did the corruption and lost the money, basically.
Correct. Correct. Yeah.
Got it?
Yeah.
So one example of this would be Vijay Mallya, basically. He did the corruption and lost the money, basically. That
Right.
way.
Right. Right.
Another example would be Dan Bilzerian and his father, basically. His
Hmm.
father committed fraud, and then because of that, he was indicted and in jailed also later.
Right.
So, but he had committed the fraud and embezzled the money already. So he
Right.
created trust funds for his kids, and that's how Dan Bilzerian got his trust fund, basically. And
Right.
because of that, he was able to embellish and spend. And after some time, that spending reduced because now the fund stopped, basically, right?
Hmm.
Because he tried to, establish some silly businesses which don't really work that way, right? Basically,
Hmm.
like
Hmm.
silly business, like I think marijuana sales or something like that, weed sales and things like that.
Okay, 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 okay.
So essentially, what Dan Bilzerian did is he took the energy flux that his father had stolen from the people and
Hmm.
converted it into dopamine oozes in his brain, basically, right?
Right, right, right. Yeah.
So essentially, humanity is mostly about how energy inside the Earth's crust is getting converted into dopamine in the brain, or the
Hmm.
requisite hormonal,
Right,
uh, hormonal cocktail in the brain, you can say, basically.
right, right. Okay, okay.
So
Hmm.
instead of the this thing happening with the pensioners, now because Dan Bilzerian's father, who is also a fraudster, since he embezzled those funds, some pensioners lost their final 30 years of dopamine or hormonal cocktails, and
Right,
that hormonal cocktail kind of shifted to Dan Bilzerian, basically,
right, right, right. Yeah,
effectively, right?
yeah,
So
yeah.
if you just remove the money layer, basically, this is what is happening.
Hmm.
The shifting of hormonal cocktails, basically.
Right, yeah, yeah.
If you very fundamentally think about it, extracting
Hmm.
energy from the earth is ultimately creating a hormonal cocktail inside the minds and brains of
Right,
humans.
right.
So that
Okay.
hormonal cocktail, if you just remove the money layer, basically, okay,
Hmm. Hmm.
that
Hmm.
hormonal cocktail is positive or negative or wanted or non-wanted and things like that, basically,
Hmm. 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 Yeah,
right? So as we fight to earn money, we are actually fighting to for our share of the hormonal cocktail, basically.
yeah,
That's
yeah,
the thing.
yeah.
And pretty much this is throughout the lifetime. If we understand this particularly well and think deeply about it, right?
Hmm. Right. Yeah,
That way.
yeah.
Okay.
Right,
Yeah. So now I will pause, just go through this video properly, basically,
ah,
and then ask questions or, have some comments and things like that,
right,
basically.
right. Okay, okay, okay. ठीक है. So,
है ना? Yeah.
is technical default like he says? Is it a common thing or is it uncommon? Is it still like considered pretty bad? Technical
It's
default
considered pretty bad only,
pretty bad
basically.
only, na? Okay, okay, हाँ.
Yeah.
So fine. So
See,
fine.
any kind
Hmm.
of default is really bad,
Hmm.
basically.
Hmm. Hmm. Right, right.
Yeah. Now, in the bad, there can be hierarchies, but then everything is bad only ultimately.
Hmm. Hmm. Right.
That's the thing. So again, when a scam happens or when a company loses value, essentially speaking, the claim of converting energy into dopamine stores is being transferred from the latest investors to the earlier investors, basically. That's
Yeah.
what it is.
Yeah. Correct. Correct. Yes.
And typically, the later stage investors are the public, basically.
And in this case, you can even say like if they won't pay the bank back, and the bank is also losing money, right? So the bank
Yes,
also has
but the
an
bank usually gets bailed out by governments,
oh
and
yeah,
then government again collects its funds
taxes.
from the people.
Correct.
So
Correct. Yeah.
so whenever a bank gets bailed out or loses loans, people are losing basically. The
Correct. Correct.
tax the taxpayers are losing
Taxpayers
essentially.
are losing. Correct. Hmm.
And guess what? That business people have ways in which they can save taxes or move countries, etc., and
Hmm.
go to tax havens, etc. But non-business people are the ones that work the hardest and suffer
Yeah.
the most.
Yeah. True. True.
Business people have escapism-based routes in order to save taxes.
Right.
But
Right.
non-business people suffer the most, basically.
Yeah. Yeah. Right. Right.
Correct? Meaning high salaried employees who come in high tax brackets,
Yes.
basically.
Yes. Correct. Correct. Yeah.
And
That's for the
especially if
majority, huh?
there is going to be TDS and things like that,
Yeah.
basically.
Yeah. Yeah. Correct. But what about with GST now? Doesn't like aren't taxes collected at every point of transaction also now? Like, I mean,
So
should
that is
be
yeah. So transactional tax is another tax apart from income tax,
income
basically.
tax, huh? Huh.
Yeah. So because of GST, companies cannot hide taxes more, basically. They have to pay.
Hmm. 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 Hmm.
That's the rule for transactional taxation. Okay.
Right. Right.
In fact, I am an advocate of taxation mostly being transactional only.
Hmm.
But
Hmm.
this would be an incomplete statement because there is some disparity of luck that happens basically. So it's like if a rich person is earning a lot, basically, we want to tax them if they are lucky or if they are polluting the social
Correct.
commons, basically.
Correct.
Right?
Correct. Yeah. Yeah.
So humanity suffers from too many tasks to do, too few resources at all times, including in the implementation of tax policies, basically.
Can you repeat that? No, that part I didn't get.
Humanity suffers from too many tasks at hand to do or
Mm-hmm.
perform
Mm-hmm.
and too less resources.
Right.
Always to do's are much more and resources are very few,
Less.
basically.
Yeah. Yeah.
So humanity suffers from this kind of a situation where to do's are many and resources are few.
Correct.
And this also happens in tax planning by governments. So essentially speaking, very few companies actually make money for the investor. Many of them make money for the founder. Think about it. Think about it.
Okay. Right. Right.
Even Byju's, that was a scam. I'm sure that the founders have taken a lot of money out of it, basically.
Oh yeah. So that is one thing I wanted to know. How exactly founders make money apart from salary? Okay. Yeah. Correct. Correct. The borrow. What's it called? I forgot.
Buy, borrow, die. Like
Buy borrow die. So they do buy borrow die also. Correct. Correct.
they do
So,
buy, borrow, die, and they can even, like, see, let's assume that Byju's is a worthless company. Let's assume for a moment.
right.
It
Right.
has zero worth, okay?
Hmm.
But on paper, they are trying to show that it has, earlier they tried to show that it has $22 billion worth, and now they're trying to
Right.
show that it has $5 billion worth, right? On paper.
Right. Right. Right.
Now let's say the founder owns 20% of the company. The founder will still have $1 billion worth if they can prove that it has a $5 billion worth, right? Now
Correct. Correct.
in a private sale, the founder might say that, okay, the company is actually worth $5 billion, but I will sell my shares at the valuation of $3 billion to some private somebody, basically,
Okay.
right?
Okay. Okay. Okay.
So let's say 20% shares, if he dilutes or sells even 5% of the shares, basically,
Hmm.
at a valuation of $3 billion,
Right.
then he gets that much amount of money, basically.
Right. But
So
founders
five,
don't generally
he'll
sell.
get
Do they generally sell founders their share?
when they sell, the company tanks faster, basically. That's why.
Right.
So
Right.
it's not like whether they do sell or not. Like they would like to sell,
Uh,
that the board and the co-investors and like this shows cheating mentality. So it's like
right.
basically they try to balance between the cheating behavior or like that kind of a thing, the cheating mentality. For example, Elon Musk, whenever he sells Tesla shares, Tesla stock price drops basically to
Hmm.
some extent, for example, right? So he gives reasons like he has to pay taxes, etc., etc. So that's why he need to, you know. But
Actually.
then think about it. Tesla as a company is already paying taxes, so he
Hmm.
doesn't need to pay taxes actually. Like,
Hmm.
see, there capital gains tax is applicable only when we actually sell the shares and gain the capitals, basically.
Correct. Correct.
Unless if we are staying invested, then capital gains or any other type of taxation does not apply, basically.
Okay. Right.
So let's
Right.
say I own a company. Let's say, okay, I
Hmm.
don't pay myself anything, but the
Right.
company's stock price keeps rising.
Correct.
So my net worth is ascending and I am paying zero taxes.
Zero tax on it. Correct.
Why? Because I'm not withdrawing anything from the
Correct.
company.
Correct. Yeah. Yeah.
When I withdraw from the company, then that becomes a taxable event.
Correct. Correct.
And guess what? These founders and these like early investors, etc. Right?
Hmm.
Now, please understand that they have a life to live.
Hmm.
Correct.
Correct.
80% of all expenses can be shifted to the company's account. So basically, think
Okay. Okay. Right.
like like travel, airfare, etc., etc.,
Hmm.
etc.
Hmm.
Right.
Hmm. Hmm.
Only 20% they need to kind of finance for their own, basically,
Right.
which they might do using borrowing against the company's stock or equity, basically.
Right. Yeah.
So the financial markets are very skewed in favor of those who fool the public, basically,
Hmm.
including bank officials. Because when a bank gets fooled, ultimately it gets bailed by the government,
Hmm.
generally speaking, unless it's a very small bank.
Correct.
Because I told you about correlation, right?
Okay.
Basically,
Yeah. Yeah.
like
Yeah.
people don't want things to fail, basically, like that,
Correct. Correct.
right?
Correct. Yeah.
So just to avoid the havoc and the nuisance that's created because of it, not because of any too many like philanthropic or altruistic intentions,
Yes. Yes.
just just to kind of avoid the nuisance that failure of a large financial institution creates, basically,
Correct. Correct.
that kind of a thing,
Yeah.
right?
Yeah.
So essentially, it's about the shifting and stealing of energy flux or the right to use and consume energy flux throughout the human lifetime in order
Right.
to in order to generate the cocktail of hormones and uh, the hormonal cocktail inside the human brain and body, basically, so as to say.
Right. Right.
It is essentially about that
Hmm.
overall, basically.
Got it. Right.
That is the meaning of the failure of a company,
Right.
basically.
Right. Yeah.
So in so this we directly correlated it with the energy flux, which is the physics concept, and the
Yes.
biology of the human brain and mind, basically, when we talk
Correct.
about the hormonal cocktail, basically, right?
Correct.
So
Yeah.
we are completely bypassing the money step in between, if you see, right?
Mm-hmm. Right. Right.
Now there are various different levels or ways of looking at things. So
Hmm.
there will be one lens wherein which there will be a monetary based way of looking at things as well,
Acha.
right?
Okay. Okay. Huh.
So monetary wise, it is just like the savings of huge number of people are
Hmm.
getting concentrated into the hands of few fraudsters, basically.
Right. Yeah. Yeah.
So
Correct.
it is kind of like leverage only, wherein which somebody who is an actor can
Hmm.
earn a lot of money because many people are giving them 150, 200 rupees per
Right.
for
Right.
watching that movie, basically. So
Right.
the
Right.
actor, director, producer is kind of earning a lot. So it is
A lot.
kind of a leverage effect, basically. Think about
Right. Yeah.
it.
Yeah.
Yeah.
Yeah. One fraud. Yeah. If it's ultimately bailed out and all that, then yeah, you're just making small amount of money from a lot of
Money
people, which
from
is
a lot of people, basically.
correct.
That's
Correct.
effectively what's happening, basically,
Correct.
right?
Correct. Yeah. Yeah.
That way.
Yeah.
Hmm. And then let us say if Dan Bilzerian's father did this, so he kind of embezzled money from a large number of investors, basically.
Right. Correct.
And
Correct.
most importantly, those investors are clueless. This is the idea. See, if somebody
Hmm.
steals money from your pocket, then you may violently react, basically.
Hmm. Hmm. Hmm.
But if somebody doesn't steal money from your pocket, but the banana that you are going to get for 10 rupees is now costing 20 rupees. So
Hmm.
this
Hmm.
stealing is non-agentic, basically. So there is no agent over here, or there is no visible agent over here.
Yeah. Yeah. Right.
So here now people don't know whom to get angry on, basically.
Hmm.
And people have lot of things to do anyway and take care of it in their own lives to be
Right.
able to be angry. So to be able to be angry on, fraudsters and scamsters who
Hmm.
anyway take the money and have escape mechanisms to, sometimes even escape the country, like Vijay Mallya did, for
Right.
example.
Right.
Even Dan Bilzerian's father also escaped the country only,
Right. Okay. Okay.
right?
Hmm.
And I think later he was caught and jailed also, I think.
Acha. Okay. Okay.
Yeah.
Hmm.
So such things I just say off the top of my head because I have heard somewhere, read somewhere, etc.
Okay. Okay.
Which may not be exactly factually correct, but they are more or less in the correct like ballpark, basically.
Mhm.
So
Right. Right.
even if not 100%, they get the point through, basically.
The
That
point is made, that even if it's wrong, it's not
yeah,
consequential here to the main
yeah,
point.
exactly. It's not consequential to the correctness
Mm.
of the main point that we are trying
Correct,
to.
correct, correct.
Yeah. Okay. Fine. So
Mm.
ultimately, what's happening is that a large number of people are being looted in small amounts, basically.
Yes.
Either by the government who bails out banks who funds fraudulent companies, or
Mhm.
directly by the companies themselves, basically.
Right, right. Yeah,
So that is what is happening
yeah,
in most cases. In most cases, okay.
yeah, yeah. Okay, okay.
And in some cases, what happens? Obviously, see, this is the dopaminergic behavior of the stock market. Companies, they kind of preserve their value, basically. Infosys would be a typical example. Infosys, basically.
Okay, okay.
So it's a utilitarian company and it kind of preserves its value and kind of grows at the rate of inflation or slightly
Right.
faster than inflation, basically. You can
Yeah.
say.
Which makes it a good business, not a great investment because it's on the
Well
plateau.
said. Well said, because now it is on that plateau. It would
Right.
have been a good business, a good investment if we had invested early, basically.
Correct, correct. Or if
When
it
it
will
was in
do
the
a JS later.
Yeah, but it doesn't seem that there is so much innovation that
Mm.
can happen in that segment now for the
Right,
another JS to happen there, basically.
right, right. Okay.
So if we would have invested in Infosys when it was, getting founded and, when it was
Mm.
on that upward slope, basically, then it
Right,
would have been a good deal. Another
right.
another good utilitarian example that comes to my mind is AWS, basically.
Right. Yeah, yeah.
AWS may also have innovation, but okay, pretty much it is at the plateau basically now. But
Mm-hmm.
AWS is a part of the Amazon stock basically. So
Yeah,
so
right,
maybe even if AWS is outperforming, something else might be underperforming, etc., etc. So it
right.
gets averaged out basically. Another good example of utilitarian stock or utilitarian company would be Google basically. So
Okay.
Google tries to be as close to humanitarian and utilitarian as possible, and
Mm,
obviously the founders don't have complete say now. Basically, the founders of Google are relatively much more ethical people, like than
Acha.
let's say the founder of Facebook, for example.
Oh, right, right. Yeah, yeah.
YouTube tried to implement that option to hide the subscribers. Basically, remember? YouTube tried to
Oh,
implement that option. See, if
okay.
there are no subscribers, there is no status hierarchy, right?
Correct, correct, correct. Yeah, yeah, yeah.
So if there are no number of likes and number of followers, etc., and
Hmm.
comments are made visible only to the original poster, right?
Acha,
Comments
okay.
are not made visible to the public, basically. So there is no metric of engagement because all this social media engagement all is a fake metric. Think about it.
Right, right. Yeah,
It
yeah.
can be bought and paid for cash, so it can be a fake metric or faked metric,
Right,
basically.
right,
And
right, right.
also, it is a metric that can be embellished because of dopaminergic behavior of humans, basically. So
Hmm, hmm. Right.
So
Correct.
for example, an OnlyFans model might have more likes on her page than a
Yeah,
social worker activist who is a male particularly and working
yeah.
for poor kids in Africa, let's say.
Right. Correct, correct, correct.
So the OnlyFans model may have multiple X more followers and engagement on her page, basically.
Yeah.
So this is the dopaminergic behavior that kind of skews the markets in the direction of entire dopaminergic activity of humanity, basically, as
Hmm.
opposed to humanitarian activity of humanity, basically.
True, true.
So businesses that are utilitarian are still good businesses to for
Hmm.
humanity to have, and they would be, you can say, good investments if we had invested in them early. So Google, Infosys,
Right,
AWS, etc. These come to mind. So
right,
all businesses are bad investments if the price is higher than a specific value. Basically, you can say.
right, right. Yeah,
You
yeah.
can say the fifth, whatever you consider as the intrinsic value of that business after
Hmm.
understanding the business to the best of your capacity.
Right.
If the price is not less than 50% of that, let us say,
Hmm.
then it is kind of a dicey investment, basically.
Yeah,
You
yeah,
can say.
yeah.
There is a counter argument to whatever I just said. In case of companies like Apple, wherein which the long-term
Right.
utility overshadows the price
Right.
considerations and things like that.
Correct, 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 correct. Yeah, 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 yeah. Even I've
That
heard of that. Yeah, that different philosophy, growth
that
stocks and all.
Yeah, correct, exactly that kind of a thing, basically.
Mm-hmm.
So yeah, so again, revising, good stock can be bad investment, bad stock can be good investment. Like I mean to say, when I say stock, I mean business. Like good business
Good,
can be
good
bad
business can
investment.
be, correct, correct. Bad
Good
investment.
bus- good business can be bad investment. Bad in business can be good investment. Basically,
Yes,
how
yes.
can bad business be a good investment? The business might have a higher book value. It might not be
Hmm.
generating money, basically. Okay, but it might have a higher book value, basically.
Yeah.
Okay, I'll give you an example of this. Let us say you have a company. Okay, that
Mm-hmm.
company has property, plant, and equipment worth 10 crore rupees, basically. Okay,
Mm-hmm.
and that company is selling for a net valuation of 6 crore rupees because of poor cash flows.
Right. Okay.
And you strike a bargain and you actually purchase it for 5.5 crore rupees, and you instead of 10, you were able to sell it for 8 crore rupees. And this happened in a span of 3 months, let us say,
Right.
hypothetically.
Right.
So
Okay.
So in 3 months, you invested 5.5 crore rupees and earned 8 crore rupees. So in 3 months, you earned 2.5 crore rupees extra. That is
Yeah.
huge return, basically. Huge
Yeah.
return.
Yeah. Right. Right. Yeah.
Correct.
Yeah.
So this is the thing. So good investments, good businesses can be bad investments. Bad businesses can
Bad
be
and
good.
not bad business. Yeah.
Fine. These were some observations actually that I wanted to make even before we started, basically, right?
Correct. Correct. Yeah.
Because see, when we are analyzing a company, we are going to put everything in context, right? Whatever we have discussed,
Mm-hmm. Right.
essentially.
Right. Right.
Till now, whatever we have discussed, we are going to put that in context as we analyze. And
Yeah.
most of the companies will get eliminated because of this these philosophies, basically. So
Mm-hmm.
out of the thousand odd, utilitarian I don't think any business can be classified as humanitarian as such, basically. at least blatantly humanitarian. Basically, it would have to
Mm,
do with education, healthcare, etc., etc. Like I am trying to create a humanitarian business which is also very profitable, which is like the toughest thing to do in this world, actually.
right, right, yeah,
Yeah, for instance, yeah,
yeah.
all other businesses are a net cost to humanity, actually. So the
Mm-hmm.
cost is kind of being transferred to nature's balance sheet, basically. So we are depleting nature unsustainably, essentially speaking.
Right, right,
That's
okay,
what
okay,
I'm
okay,
saying.
right,
Yeah.
right, right.
So ideally speaking, what needs to happen for humanity to sustain to the maximum possible levels is that we all should reduce our consumption drastically,
Mm,
and we should have a closed loop materials economy, meaning we don't need to extract more from Earth, basically.
right, got it, okay.
So
Okay,
whatever we have already extracted, we are kind of recycling, including silicon and
right,
things like that. So
right,
we should have only that much population that this closed loop materials economy can sustain, basically.
right, yeah.
So you know that when energy is pumped into the system, then
Mm,
the like entropy churns around and turns around, and there is this economy and economic, economic prosperity slash recycling that happens, basically, right?
yeah, yeah, yeah.
So only the renewable part of energy should be used to run and operate this closed loop materials economy.
Mm-hmm.
So best guesstimates tell us that it is between 1 billion humans and 2 billion humans, or maximum would be 3 billion humans, that
Mm,
Earth can sustain using the renewable energy flux. Currently, we are using the non-renewable energy flux,
correct,
right?
correct,
Basically.
yeah, 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 yeah.
So that's why we are 8 billion and going on to 10 billion will suddenly decrease later, basically, when the
Right,
non-renewables run out, basically, right? So
okay,
that
okay.
would be like a dopaminergic crash kind of a thing, basically.
Mm-hmm.
See, the law of thermodynamics says that entropy, the second law, yeah, entropy will always increase, but it does not tell us about the rate. Please understand.
Right, right.
So, smartness, biological smartness as humans will imply that we reduce the rate of increase of entropy. That means we reduce the rate at which humans will effectively die.
Okay, okay, right.
See, even after humans die, the earth is going to remain, right?
Yeah.
So, we are not really saving the earth, we are saving ourselves,
Saving
basically.
ourselves, yeah, our species, yeah.
Yeah, our species, so as to say.
Mm-hmm.
Mm. So that's the idea here, right?
Right, right.
So the point is that entropy is going to increase, but
Hmm.
we just have to increase it or let it get increased in a sustainable manner. And ultimately, as energy flux gets converted to entropy in physics,
Hmm.
cocktails of hormones and hence emotions basically are going to occur in human brains and minds, basically, right?
Right, right.
So
Yeah.
we are conscious creatures and we care about not suffering
Hmm.
to start with, and then feeling fulfilled and contented to end with, basically. So we all want to move from away
Hmm.
from suffering towards fulfillment and contentment as conscious creatures.
Right.
Also talking about animals, basically, like
Hmm.
relatively higher order consciousness oriented animals like mammals, etc. Right.
Right,
So
right.
we all want to move away from suffering and towards fulfillment.
Right.
So if we can do this on a kind of meritocratic basis for most humans in a sustainable manner,
Hmm.
then that is a good enterprise. That is a good
Right,
enterprise or a good goal to have.
right,
So,
right.
so nobody is trying to say that we should not reproduce or we should not create more humans or have more humans, etc. But we
Hmm.
don't need to have them at the same time, right? We can spread them out throughout time, right? So
Right.
it's like you can you can have either like
Hmm.
I think the total number of humans that has ever been in existence is 100 billion, basically.
100 billion. Okay, okay, okay.
For
Ach-
200,000 years. Okay.
ach-
100 billion is the guesstimate, the best guesstimate, very close to the best guesstimate of total number of humans who have ever lived.
Acha.
Now,
Okay, 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 okay.
now
Huh.
if humanity suffers and dies,
Hmm.
then let's say humanity suffers and dies in the next 200 years.
Okay.
Okay.
Hmm.
Then that number would be approximately 100 and maybe 20 billion, 120 billion, something like that
Acha. Okay, okay.
would be the number. But if
Right.
we are slow about it,
Hmm.
if we see if consciousness is value, then spreading consciousness across space and time is value. Do you agree?
Yeah.
If if the light of consciousness is value, then spreading consciousness across space and time is value.
Right.
So if you look at it from a time agnostic perspective,
Hmm.
we were able to scale or, bring in the light or flame of consciousness with respect to the number 100 billion for the past 200,000 years on Earth.
Right. Okay.
Talking only about the human species right now, as of
Hmm.
now,
Correct.
basically.
Correct. Correct.
Being anthropocentric and talking only about the human species. Okay.
Right. Right.
So, yeah. So, thinking like this,
Hmm.
100 billion is our kind of success number, basically. This is kind of our success number till
Hmm.
now. If
Okay.
let us say having more humans is success, basically. Okay.
Hmm.
But then I would argue that just having more humans is not really success. Having more humans is akin to increasing the number on the x-axis of number of humans, and on the y-axis should be their contentment, basically, right?
Right.
So
Yeah.
if you are having a human being and only torturing them from start of life to end of life, then it is better that that life would not exist. Would you agree? That's why
Yes.
people go for euthanasia and suicide and things like that, because they are extremely suffering, right? Basically, if
Hmm.
somebody is in chronic distress and extreme suffering,
Hmm. Hmm.
then in that case they go for euthanasia, suicide, etc. Right?
Right. Right.
It should not happen, but it has been
It does
known to
happen.
happen. Basically, yeah, it has
Hmm.
happened
Yeah.
with humanity, right? So
Hmm.
extreme suffering, extreme fanaticism, etc., extremely running away from truth and living in own silos of
Hmm.
beliefs, etc., belief system, dogmatic beliefs, etc.
Hmm.
This so basically, if you think about the entire human experience on planet Earth being time agnostic, so 100 billion humans are there. So
Hmm.
what I argue is that if let us say they are going to be sad, miserable, dogmatic, or kind of uh, away from reality and trying to haunt and kill each other, fight amongst each other, etc. So
Right.
50 billion humans who are living peacefully and contented are better than 100 billion humans who are living with negative emotional states,
Makes
basically.
sense. Makes sense. Makes
So
sense.
it is not only about the number of humans, it is also about that emotion versus time, emoji graph, basically.
Right. Right.
So it is about the number of humans and about their emoji graphs,
Emotigraph.
basically.
Correct.
Yeah.
Correct.
So if their emoji graphs are on higher levels of consciousness, then
Hmm.
that is better, basically. So
Hmm.
value seems to be to increase the number of humans on the x-axis and to
Right.
increase the emoji graph of these humans on the y-axis.
True. Yeah.
Now this human experiment will fail and we will die
Okay.
if
Huh.
let us say we don't proceed sustainably, right?
Hmm. Correct. Yeah.
So there is no point in creating like 10 billion humans in just 100 years,
Hmm.
wherein for the past 200,000 years it has been 100 billion only,
Yeah.
basically.
Yeah. Yeah.
So per 20,000 years we created 10 billion humans, and
Hmm.
now we are creating 10 billion humans in just 100 years, basically, something like that.
Yeah. 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 Correct.
We
Correct.
could potentially,
True.
basically, if the energy flux keeps going up, basically. Yeah,
Yeah.
but that's not going to happen. So the idea is this, that
Hmm.
let more number of humans live. Okay,
Hmm.
so that the human experiment and the light of consciousness continues. But
Hmm.
then all of them don't need to live at the same time. We can distribute it across time, basically. As
Right.
far
Right.
as far as the life of Earth is concerned, because the life of Earth is very much more, basically. Like
Hmm.
there is still a long way to go before the Earth dies, essentially.
Okay.
So
Okay.
at least even if we can't leave the planet Earth, it is at least very, very important to
Hmm.
make sure that we are there till the end of
Hmm.
planet Earth, basically.
Right.
Something.
As long
And
as possible, like
as
that.
long as possible. And if we are going to fail in this, it is better to try our best and forget the rest, basically.
Right.
Do our
Right.
best and forget. The serenity prayer, basically, that kind of a thing.
Yeah.
The
Yeah.
as entire
Higher will.
humanity, as
Huh.
entire humanity.
Yeah. Yeah.
Okay. So to
Hmm.
do our best and forget the rest is
Correct.
what we can do, basically.
Yeah. Yeah.
Overall. All right. So this is what is value. And we came to this discussion when we were talking about most human companies are engaging in dopaminism. Dopaminism
Hmm.
exactly leads to early results but early crashes also, basically.
Right. Right. Yeah.
And now the sugar high lasts for few hours, but
Hmm.
the stock market dopaminergic high can last for years also.
Hmm. Correct. Yeah. Yeah.
The bubbles can last for years also, basically.
Correct. Correct.
So the stock market bubbles are akin to dopaminergic highs.
Yeah.
Correct. So they
Yeah.
can potentially last for years or sometimes even decades as well, basically.
Hmm. Hmm. Right.
But when they burst, just like there is a sugar crash or alcohol crash, basically, you know, there is this hangover on the next day, right? Because of
Yeah.
alcohol,
Right.
right?
Right.
So
Yeah.
because how there is a sugar crash, alcohol crash, etc. Just like
Same.
that, when there is a economic crash, there is going to be lot of suffering, and most of the suffering again is transferred to the final investors, basically, which
Yes.
mostly are the public. Basically, think about
Yes.
it.
Yes.
At
The
large,
ironing public. Yeah.
mostly the higher link public. Yeah,
Mhm.
mostly the higher. But then to some extent, everybody, because there is
Mm.
transactional taxation as well, right?
Yeah. Right. 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 Of course. Yes. Yes.
To
Perfect. Yeah.
some extent, everybody, like to a large
Everybody.
extent, also everybody, because see,
Yes. Yes.
the person who is earning 3 lakh rupees and not paying taxes
Huh.
is still paying transactional taxes, is still paying
Correct. Correct.
transactional taxes,
Correct. Yeah. Yeah.
on the goods and commodities that they consume in order to generate their hormonal cocktail inside their brain minds,
Right.
basically. Like, make sense?
Yeah.
Yeah. Yeah. So ultimately,
Mm.
what we are trying to say is out of 7,000 companies,
Mm.
6,000 are kind of frauds and dopaminergic that
Right.
are leading to the end investors' money getting embezzled, basically, right?
Right.
Effectively
Right.
speaking.
Right.
And out of those remaining 1,000,
Mm.
apparently 950 would be just utilitarian who have kind of hit their peak and are in the
Mm.
plateau stage, kind of a
Correct.
thing, wherein
Correct.
which they don't see or foresee some J curve. Okay.
Mhm.
And then only 50 would be there that would be like kind of going to ascend, out of which we in our lifetimes hope to find 10, 20, basically.
Okay. Okay.
Because
Right.
then it also depends upon whether we are having the time enough to analyze these 7,000
Right.
companies and things like that, right? Basically.
Mm-hmm. But those 10-20 should be enough. Like if we catch them at the right
Yeah.
time, it should be enough to
Exactly. And
give out.
also with the philosophy of long-term stock, like brand stock, etc., etc. Like for
Yeah.
example, Warren Buffett is holding Apple right now as of 2023. Apple
Acha,
is being held basically. A lot of Apple is being held right now by him.
acha. Okay. Okay. Okay.
Basically, Chris sent me his
Hmm.
portfolio split.
Acha.
Yeah, you can even Google this Warren Buffett portfolio split.
Acha, his portfolio split as in Warren Buffett's. Ah, okay.
Yeah, Warren Buffett. Yeah,
I thought Krish's portfolio split. Warren.
no, Warren Buffett.
I guess these are static pages, so I don't know कितना पुराना है देखता हूँ.
No, don't go here. Go infographic. Yeah, okay. This is a good split. Yeah, see, this is correct actually. This is not very old. See,
Achha. Oh, okay. Okay.
this
Okay.
is 51% is in Apple right now.
Whoa. Okay. That's a lot.
51% of his net invested money is in Apple right now.
He's in Apple right now. Okay.
And later, the second one is Bank of America Corporation. See,
Mm-hmm.
after that is Amex, American Express.
Okay. But
And
what
then
do you think he's expecting like a new JS curve or something like that?
see, we don't know that basically, but even if he is not expecting a new JS curve,
Hmm.
these companies do beat inflation, right? So
Yeah.
essentially, like staying invested in these companies is still
Hmm.
better for him basically, rather than
Hmm. Hmm.
holding cash. Because if he holds cash, then his actual net worth is declining because of inflation,
Correct.
essentially.
Correct. Makes sense. Makes sense. Got it. Got it.
And also look at this phenomena. The stock market has to go up only because government keeps printing money. Think about it. So asset prices will go up naturally, right? Basically,
Right.
because
Right. Correct.
see, there is just more money supply in the economy basically as time
Yeah.
passes, in short,
Yeah. Yeah. Right.
right? So if
Right.
you look at this, Kraft Heinz you can see is down basically.
Was it? Yeah. Craft Heinz.
And that also by minus 57%. See,
Okay. Right.
it's a small part of his investment, so he is able to tank such losses basically, even though the dollar amount might seem big for like somebody who does not have so much investment under their belt, basically,
Mm-hmm.
for example. Okay.
Right. Right.
Yeah, so you can see like, okay, this is the kind of 51 and then 8 or even 9 basically. So that's 60, then 67, 73, yeah, 78, 80, 83, 85, 86, 87. So 87% has been shown over here. And maybe there would be then many small 1%ers basically. Like go
Mm-hmm.
down. Are there 13 or 10 more companies? Yeah,
Yeah.
there are.
Yeah.
Yeah.
Oh, yeah. Yeah.
Okay. So an interesting question is
Hmm.
he's still invested in the lower companies also, right? Think about it. Just go down. Yeah. He's still invested. Okay, let's look at let's say Visa. He's still invested in Visa 0.57%, right?
Hmm.
He's invested in MasterCard Incorporated also. These
Yeah.
are competitors of Amex. Think.
Right.
These are competitors of Amex. So
Hmm.
this begs the fundamental question: why is he invested in Visa at all? If he believes in Amex, then
Right.
why wouldn't you put that 0.57%, which comes out to be, by the way, how much? $1.97 billion basically. Okay.
So is he what hedging his risk or something like in the
Yeah.
industry?
Yeah. So this is something that we need to think about and talk about it basically. Like,
Ah, okay, okay. So you're also backward analyzing this as to why he is doing it, huh?
no, matlab,
No.
the thing is like, I think that it is for risk hedging only,
Hmm,
basically.
hmm, hmm.
So it's like any industry is going to have two, three competitors, market leaders, basically.
Right,
So
right.
he's kind of investing in number one, two, three in a
Hmm.
weighted average manner. So you
Right.
see,
Hmm.
so it's like, would you like to bet on, see, let's say Nadal, Federer, and Djokovic are playing a tournament, let's say Wimbledon. Okay.
Hmm, hmm.
So would you like to bet, let's say you have 100 rupees. Okay.
Yeah.
So would you like to bet 100 rupees on Federer winning versus would you like to bet, let's say that year Nadal is playing very nicely. So let's
Hmm.
say, would you like to, another bet would be like this: would you like to bet 50 rupees on Nadal winning
Hmm.
plus 30 rupees on Federer winning and 20 on Djokovic winning? So
Right.
the second bet seems to be better basically.
Yeah. Yeah.
Okay, especially if the gains are higher. And then there are other 100 players in Wimbledon also, imagine. So
Hmm.
rather than betting on the first horse or the biggest horse or the, yeah, it's better to bet on the top three, something like that, basically.
Got it. Got it.
In a
Right. Right.
in a weighted average manner. In a weighted
Right.
average manner.
Wait, level manner. Right.
But
Yeah.
he might be so inclined towards Amex, basically. Let's look at
Hmm.
Amex. Yeah.
Hmm. I think
So
nine
he
nine point no 7 point something. Yeah.
yeah, so he's so much inclined towards Amex that in order to even hedge the bet, he has invested very less in the bottom ones, basically.
Yeah.
Okay.
Yeah. Yeah.
So now if you look at it, I think we had reached, when I reached 1%, it was 85% of his portfolio. So
Right. Okay.
Davita
Yeah.
Inc. or HP Inc. or Moody's Corporation, right?
Yeah.
So this
Yeah.
is like 85% of his portfolio. This is basically thing.
Right. Okay.
How
Okay.
many companies are these from top till Davita Inc.?
Six ones here. I'm counting 7, 8, 9. Just 9 companies are forming.
Just nine companies forming
So
85% portfolio.
yes. Yes.
Now, do you realize that we don't need hundreds of companies,
10 or
basically?
10 companies. 10. Oh yeah. Correct. 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 Makes sense.
Yeah.
10 companies.
So
Correct.
let's Google how many companies are listed in the USA stock market, basically. Let's Google this. So that means that what we essentially need to do is do fundamental analysis and find those 20 companies in the Indian stock market
Yes. Yes.
out
Right.
of the around 50 that exist,
Right.
and we will just hold cash, and whenever the market dips, we will invest in those companies and hold tight, basically.
Right.
Right? So how many companies? Yeah, it's just 2385 basically. No, no,
Two,
that is NYSE. That is
correct.
NYSE
Correct. So
uh,
in the USA,
in the US.
list of American name. This is not right. Or a number of
Number. We want number of, yeah.
on
Yeah,
the
four to
stock
six. Yeah,
exchange.
four to
Four,
six.
six, six. Yeah. Yeah.
Four to makes sense, right? Because Indian population is higher, basically.
Yeah.
Makes sense, no? Think
Yeah.
about it.
Yeah.
Because Indian population is higher. So
Hmm.
us as see, in trading, we can trade in any stocks, basically. Okay.
Yeah. Yeah.
In trading, we can trade in any stocks. But
Correct.
in long term investing, we are essentially trying to find
Hmm.
these winners, these 20, 20
Yeah.
30 winners, these 20, 30 winners, out of which we will be we will be going to, we are going to invest heavily in the top 10, you can say, out of 30. So you
Hmm.
can say our portfolio might also look something like this, that 85 to 90% is invested in the top 10 to 12 stocks,
Yeah.
and then 10% is invested just for the sake of little bit of hedging in the
Correct.
in the final 18 stocks, you can say.
Yeah. Yeah.
Okay. So
Yeah.
this is one method of thinking. All right.
Okay.
Whatever I have outlined right now is one method of
Right.
thinking.
Right.
Okay. Now let's look at see, we are analysts or we are scientists, you can say.
Hmm.
Okay. Physicists. So
Yeah.
we are going to analyze all points of view. Correct.
Correct. Correct.
So
Yeah.
now let's look at Peter Lynch's investment portfolio, which is exactly very diverse and opposite of Warren Buffett's, basically.
Acha. Okay. Okay.
So
Interesting. So
let's
Peter Lynch.
Peter
Yeah.
Lynch investment portfolio. So Peter Lynch was also one of the better hedge fund managers. And then let us look at Ray Dalio's also, basically. On the
Hmm.
new tab, you can
Okay.
look at Ray Dalio's. investment portfolio. Yeah,
The
you can
video.
go to image. You can go to images basically because that will give you visual representation. We humans are visual creatures mostly. Yeah.
Right, right.
So you can see that here. Yeah, you go to Dalio's thing basically.
This one, no, this
First one, yeah, the first one, yeah, first one is okay.
is a
First,
video. It's okay, no? It's a
yeah,
video.
it's okay. Yeah, it's okay. No, only an image will open right now, I believe.
Acha, oh, right, right. Okay. Yeah. अरे वाह,
Yeah.
one second. हाँ,
I just actually want the image only, like, but in
हाँ, हाँ, हाँ.
slightly zoomed format, the way in which Warren Buffett was shown right there.
Open image in new tab will do that, and
I
actually,
don't think
resolution is bad.
resolution is bad. Okay.
We'll go for one of the other ones, but here actually we'll have to check the date also because the
Yeah,
portfolios look a little different.
I understand what you're saying. Yes, yes.
I'll
But
maybe
see,
sort them by.
the point that I wanted to illustrate basically was that he is invested in multiple stocks basically,
Correct, correct, correct. That's true.
compared to Warren Buffett, who is invested in quite a few stocks, only few stocks
Right,
basically.
right, right.
So you can see that Peter Lynch is not that. So okay, Peter Lynch's return basically is
Hmm.
something percentage. Okay,
Okay, okay.
and Ray
Right.
Dalio's return is something percentage. But we cannot compare them by percentage. We have to compare them by
Hmm.
absolute value as well because
Okay.
when there are
Hmm.
only so many profitable businesses in the world, most businesses are looting the public. Please understand. Like we proved
Right,
earlier, right? We have
right,
proved in this conversation this phenomena basically, right?
right.
So
Yeah.
it is very difficult to find extremely profitable businesses. Very difficult to find that
Hmm.
also have able and efficient management, that also have a long-term competitive advantage, that also have a long-term market relevancy, and there is a growing market demand, basically.
Right.
Right?
Yeah. And it's also priced prop. Acha, but I hope
Right.
probably this much. If we go, then we can buy it at a later time when the
Then,
price is low. Yeah.
so,
Right.
for example, from what I heard, Warren Buffett sat on the one stock for 10 years. He bought that
Acha.
company. He bought that company after 10 years. I am
Acha.
forgetting what company it is. I believe it is Gillette, but I'm not so sure.
I'll see Warren
Yeah,
Buffett waited 10 years. I'll.
yeah, waited 10 years to buy a particular stock. So he knew that the fund, I think it is Gillette. Let's see.
Okay. It's not showing up. We'll see.
So
We'll see.
this is inside literature, like inside some video,
Acha.
inside some book, something like that. Basically, it's
Acha.
like
Okay. Okay. Okay.
okay, just Google like this. Did Warren Buffett wait 10 years to buy Gillette? This is just a
Yeah. Fun one.
guesstimate shot. Basically, let's see. We don't know.
Let Warren Buffett wait 10 years to buy.
To buy Gillette.
Actually, we can maybe ask AI if it in the acquisition. I'll try and go to Bard. Let's see.
Yeah, let's see.
Let's see if AI can figure out such answers.
Yeah, yeah. Let's see. Yeah,
Oh, it's not supported for this account. Okay, okay. Uh,
you can add a Google account basically. Now
I
from
can.
there
I
you
don't
can.
remember any of my passwords. Like, like
Okay, fine.
nothing.
Okay, fine. We will Google this later. There is some company though, basically. Okay. I don't know whether it is Disney or Gillette, but I think it is Gillette. I know where this is mentioned. It is mentioned in a YouTube channel called The Swedish Investor. So
Acha, okay, okay. Right.
but which video I wouldn't be able to tell basically. Like
Acha.
see the thing is I am exercising and background play is going on and things like that. And
Right.
there is
Acha.
there is auto play, so there are playlists and things like that. So even
Acha.
I don't know which video exactly. So there
Okay.
is some video. So he waited for 10 years in order to buy that company. I think it is Gillette only.
Okay. Okay. Right.
Okay, that can be researched later basically.
Right.
That just the company name doesn't really matter that much basically.
Correct.
But
Correct. Yeah.
now look at the patients and the patient move basically. That's what I'm trying to say.
Correct. 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 So we'll also do that. Yeah.
Yeah. Now another thing is people say that like maybe Peter Lynch's record returns. Yeah. Just type Ray Dalio record returns. Peter Lynch record returns like that type. Ray Dalio
Okay.
record returns. Peter
That
Lynch
record return.
returns. Yeah.
Dalio record return.
Yeah. So how much is it? See, all weather portfolio return 2.62% year to date and 5% annualized.
Acha.
Right?
Okay. Yeah. Correct.
Yeah. So that is like quite bad, right? Not so good, you can
Yeah.
say.
Yeah. Yeah. That's
Okay.
what.
Let's look at Peter Lynch.
But this is okay. In the last 10 years from 2023 से पहले ठीक है.
Yeah, yeah.
29.2. But this can't be. I think this is just the most recent one. I'll look at. I think 13 point. Okay, this is also not great, I guess.
You're talking about Ray Dalio right now?
Redalio,
13%.
Redalio,
Yeah.
because Redalio, what came up here seems to be just the most recent one. It
Correct,
seems
correct.
too low, no?
Not
That's what I'm
overall.
thinking.
Not overall. Okay. Let's look at Peter Lynch.
Peter Lynch seems to have a good 29.2
Okay, under his
from
13-year
77.
management, Fidelity Magellan Fund from 1977 to 1990. So, firstly, you have to understand that these are the extreme petroleum
Right.
extraction years, basically.
Okay,
So, the
okay, okay.
company was booming and also inflation. So, two things. Okay, so entire stock market was booming, yeah, and like
Hmm.
a lot of inflation as well, and also petroleum extraction. So,
Right.
obviously, returns will be high in this period.
Correct.
Under his 13-year management, the fund earned an annualized return of 29.2%, consistently more than doubling the S&P's performance. He
Right.
also
Oh, okay, okay.
increased Magellan's assets under management from 20 billion to 14 billion. Okay, this is AUM. Don't think about it. This is not investment return. So it's like he convinced more
Correct.
and more people to
People
let
to
like
correct.
people. He convinced more and more people to invest with him,
So basically,
basically.
he got
Right?
popular. Like that's what this indicates.
Yeah.
Like,
Yeah.
that's
This indicates he got popular, basically.
yeah,
Okay.
yeah,
So 29.2%. Okay.
yeah,
Now Warren Buffett's return search basically.
yeah. Record returns, no?
Yeah, yeah. That same thing with Warren Buffett. Yeah.
Okay,
Yeah.
the time period is much larger, even though it's
Yeah. And no,
19.8.
no, no, wait. Not only the time period, but the sum of money is also much larger. When the sum of money is
Okay.
larger, you
Hmm.
have reached the upper saturation, okay,
Right, right.
of
Hmm.
most markets. Okay. Now
Yeah.
you think about it in absolute money value. If you
Hmm.
have got 100 billion and if you are earning, see how much they say for 19.8. Okay. They're saying 19
Right.
point. Let's take 10%. Okay. If you have got $100 billion and if you are earning 10%, you are still earning $10 billion per year.
Correct, correct. Yeah.
Now, if you have $1 billion and if you are earning 100%,
That
100% returns are much more than 10% returns, right? Percentage
yeah,
wise,
correct,
basically.
correct, correct.
So
Yeah,
then still you are earning $1 billion, basically.
yeah,
Are you getting it?
yeah.
So when you're working with larger sums of money, it
Hmm.
is very difficult to get high percentage return. Very difficult, basically. Almost
Hmm.
impossible.
Correct, correct.
When you are working with larger sums, so extreme amount of innovation and creativity, like I do in my company, is needed, basically, for instance,
Right, right, right.
in order to, be on that upward ascending slope, basically, that kind of a thing.
Hmm.
When you are working with larger sums of money, lower percentage return is what is expected. So
Correct.
this see, Warren Buffett is working for with an AUM of $500 billion. Peter Lynch was working with an AUM of $20 billion. Think about
Yeah,
it.
right, right.
And
Correct.
that also in the later part of his career. Okay, not
Right.
even 20, $14 billion.
14.
So $500 billion and $14 billion is quite different, right?
Yeah,
Basically.
yeah.
So still compared to Peter Lynch and Ray Dalio,
Hmm.
Warren Buffett is significantly better. Think about it.
Got it. Right.
So what these hedge fund managers are doing is they are
Hmm.
kind of splitting their investment in various different businesses, basically.
Okay, okay, right.
And
Yeah.
because of that, their returns are kind of getting averaged out. Now, please understand one phenomenon
Hmm.
I will explain. If you are invested in businesses,
Hmm.
then you will always pretty much beat inflation because you have kind of some amount of pricing power, basically, right?
Correct, correct.
So
Yeah.
let us say if you just keep cash in the bank, because of
Hmm.
inflation, the value of that cash decreases.
Decreases. Correct, correct.
The inflation is a silent stealer and a silent killer, basically.
Yeah, yeah. Correct,
Both. It just kills financial value. All
correct,
right.
correct, correct.
Yeah. So essentially speaking, if you are invested in any kind of business, including a small business, let's say you have a small
Hmm.
bakery. Okay.
Hmm.
Now
Hmm.
inflation happens, you can slightly increase the cost of your goods, basically, right?
Correct, correct, correct.
Cost of whatever you're selling. So
Yeah,
you
yeah.
can at least hedge against inflation by having invested mostly in businesses, basically, right?
Yes, yes. Right.
So who knows that, okay, this 13% return and all, maybe 8% was inflation only out of it. So his
Hmm.
real return might be only 5%. Think about it.
Correct, correct. Yeah,
Because inflation is also inflating the, dollar value, right?
yeah,
Basically.
yeah. Correct.
Like, for example, I know some of my relatives, like one family who are amongst my relatives,
Hmm.
they bought one flat of 20, I think 21 lakh rupees in 2005.
Okay.
In
Given that.
2023, in 2023, 18 years from now, the
Hmm.
value of that flat is approximately 1.6 CR.
Okay. Okay.
So what
So
did they do? They did not do anything much,
18
right?
years.
This is like
Right.
this is pretty much inflation working basically, right?
Right. 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 18 years में what they made it around eight, little less than 8 times. Huh?
Yeah, something like that.
But a lot of it, at least if nothing else, a huge part of it.
A huge part of it is attributed, or I would attribute it to inflation. A huge part of it I would attribute to
Hmm.
it, basically. So inflation. So basically, if they had 18 that 20 lakh rupees in cash,
Yeah.
then now it would be 10 lakh rupees or 5 lakh rupees, basically.
Oh
Think.
yeah, we can actually check that also, right?
Yeah, check that.
NSE
Check
from
that. Yeah, please check
NSE
that.
from 2005 to 2023. Acha. NSE, is there any average
Yeah, Nifty only will, I think, give it basically.
Nifty from I'll say Jan 1st, 2005 to
Yeah.
Jan 1st, 2003. No historical data. Huh? No, wait. Historical data. We'll just take we'll take Nifty 200 or something, no?
Yeah, sure, sure.
What?
Nifty 200 is, yeah, Nifty 200 is fine. Yeah.
Okay.
Because we kind of need to see what the stock market is doing, basically. Like,
Yeah, yeah, yeah.
yeah.
ये अभी का है ठीक है चलो.
Yeah. So let's see how their property did compared to Nifty. I think Nifty will do much better because equity does better than gold than real estate, basically. So let's see.
So it's around 10,000 and it was अरे ये तो they're showing literally okay it's 10,000 we saw here na now I just go back to I'll
Last
just change
page,
this
something. Okay.
or I'll just change this to
Okay, okay, fine.
2.5.
That's better. That's better, basically. 10,300 it is, right? Yeah.
So it is 10,300. Yeah, yeah, yeah.
Hmm.
So it's like 10 times or yeah 9 to 10 times it is increased whereas
Yeah,
real
so
estate increased,
even Nifty has done better than this very good real estate investment also.
yeah,
Think.
yeah, correct,
Nifty has done better than this very good real estate
very good
investment.
real estate, correct,
So
correct.
imagine how bad cash is. If we had just held cash right now, basically, then that cash would be
Mhm.
literally worth half of it, basically, something like that.
Yeah, yeah, yeah,
If they
correct,
had just kept cash in the bank. So keeping
correct.
cash in the bank over the long run erodes value so much. See, think
Yeah,
about it.
yeah, yeah,
Because
correct.
this 18 years is a very good enough, and this is a practical example in front of our eyes, basically, a real example.
Mhm. Right,
And
right.
18 years is a huge amount of time, basically, to analyze something like this, right?
Yes, yes.
This is something that has happened in front of my eyes. I was I was a witness to this deal, basically.
Right, right, correct, correct.
Mm. And also Nifty is more liquid. So definitely stock market is
Yeah.
going to be better than real estate, and definitely stock market is going to be better than gold also. See, gold was something that basically just beats inflation, you can say.
Okay, okay. Right,
It beats inflation because it has got that value of gold and silver, basically. That
right, right. Correct, correct,
precious metal value, basically.
correct, correct, correct.
So the philosophy is, in general, like I had outlined it in one of the videos also. If you are under the age of 30, let's say
Hmm.
from age 20 to 30, you should, or you can put it like this: from age 20 to 25, you should have minimum 1 years of savings in bank accounts, or
Hmm.
these are these government bonds and treasury bonds kind of a thing,
Right,
easily liquid, easily withdrawable, or if nothing else, then FDs, basically, right?
right,
So
right.
so savings for 6 months should be there in the bank account.
Hmm.
FD remaining 6 months can be FD in your bank account. So 1 year
Right,
savings totally should be present inside the bank account, liquid with you basically.
right, right. Correct.
When you are below the age of 25.
25. Huh.
From 25 to 30, it should be 2 years.
Hmm.
From 30 to 35, it should be 3 years. From 35 to 40, it should go on to 4 years of
4 years.
saving. From
Right,
40 to 45, 5 years. 45 to 50, 6 years. Yeah. 50 to
Mhm.
55, 10 years, because now your earning is less, right?
Yeah, yeah.
50 to 55, 10 more years of savings, and
Right,
55 to 60, 30 more years should be there basically.
right,
So
right.
it
Correct.
the requirement of more and more bank increases as you age more and more basically,
Right, correct.
right?
Yeah,
So this is like a general rule of thumb. Now, after you have this appropriate saving, liquid saving in your bank accounts, in FDs and savings and normal savings, etc. When you
right,
have these secured, then whatever is the remaining money, which is different for different people,
right.
should be invested. Typically, Indians do it in gold, real estate, and then some of them do it in stock market, basically. Okay.
Mm-hmm.
I believe that for a smart investor, you should remove the gold. You should not invest in the gold at all, means at all you
Right,
should not invest. Okay.
right.
Except if you are a smart businessman and want to have gold so that you can even take gold loans only. So unless you are going to use that gold to, get
Good,
debt
good. Thanks.
funding. Yeah,
Acha, okay, okay,
quick
okay.
debt fund, quick debt funding to expand when needed and to capture more market share and things like that,
Right,
basically.
right, okay, okay.
So unless that is so ultimately gold as a vehicle for debt to increase equity, basically.
Right, okay,
So
okay.
ultimately, indirectly, gold is being used to increase equity, in short,
Equity,
basically.
correct, correct, correct.
So
Yeah.
unless you're going to do that, because see, getting a gold loan is much easy compared to getting a stock portfolio loan or getting a loan against.
Right,
Yeah, because see, stock portfolio, then the bank will say that you'll have to transfer the shares of certificate in our name. We will hold
right,
it, and then after you clear the
right.
loan, we'll give it back. No, no, gold is just take the gold, give me the money. So it's like
Correct.
a half an hour or 20-30 minute process, basically. So
Right, okay, okay.
gold mainly for the sake of hedging against inflation and for the sake of gold loans or
Funding, yeah, yeah.
so maybe less than 5% of the portfolio can go there.
Hmm.
Okay.
Hmm.
And I would even think that let's calculate the portfolio after the savings is, usually people include the savings as a part of the portfolio. I am saying that let's develop a new philosophy. See, savings, we know that this much should be there according to age wise, right? So
Right,
now let's assume that that much savings is there. If that is not there, then just do extreme amount of hustling and save that money first, basically. Right.
hmm. Right,
That then only you will have peace of mind. Otherwise, you will not even have peace of mind, basically.
right,
Right.
right.
Yeah. And after that much FDs are done, etc. FDs are just barely beating inflation, right? By let's say
Hmm.
0.5% or so, half a basis point, 0.5% or something like that,
Correct,
right?
correct. Yeah.
And now comes the time where in which you want to make your money sweat to earn more money, basically, right?
Hmm.
So
Hmm.
let's assume that all whatever that FDs and whatever the age-wise liquid investments that you need are
Hmm.
there. So at age 60, you have 30 years worth. At whatever at age 45, you have got whatever years worth, etc.
Right, right.
Right?
Yeah.
Like 5-10 years worth, whatever it is, whatever I said earlier, basically, like
Hmm.
that.
Hmm.
Yeah.
Yeah. Yeah.
So I kind of gave a discrete range. It can even be continuous. Year by year, you are increasing, let's say,
Right,
2 months or whatever it is, basically.
right,
Some
right,
2 months or 3 months of extra savings, etc. Like that. All
right,
right.
right.
So, assuming that this savings and FD are done, I think then we should talk about the invested money because savings is like that liquid and safety money, right? After
Hmm.
that, we should talk about investment money after
Right,
savings is done. All right.
right. Okay.
So, out of 100% of the investment portfolio, which
Hmm.
we are talking about after savings,
Right.
I believe the compulsory thing is one real estate of their own or our own, basically.
Okay. Okay.
The
Right.
primary real estate location residence where
Hmm.
that person is going to stay for most of their lives,
Hmm.
because
Hmm.
this real estate is like an investment, even though some people advise to not call the primary home as an investment. In monetary terms, it might not be a asset because it's not paying you, it's not paying you rent or something like that, but it is
Correct.
paying you hormones, please understand. Okay.
Okay.
So
Right.
we
Right.
have to merge kind of financial thinking with biological thinking here.
Right.
So
Right.
if you have a house that you own, you can create a garden, or you can have good interior decor. You can
Hmm.
even farm nearby. You can have a basketball court in your premises, etc. You can
Right.
have a swimming pool in your premises, etc., etc.
Right.
So
Right.
basically, it is paying you in hormones, even if not in direct rent, basically.
Right. Right.
So that's why it is a lifelong investment. One house of your own,
Hmm.
house or home office or whatever it is a
Hmm.
lifelong investment, basically.
Right.
But
Right.
if you have a second house, then that kind of becomes a bad investment because you could have done better in the stock market, basically.
Correct. 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 Got it. Right.
So having one house that is sufficiently big, not necessarily too big, because if it is very much big compared to what you require, if there is, see,
Hmm.
beyond 10 bedrooms, there is extreme marginal utility, basically. Think about it.
Correct, correct,
If
correct.
you have
But you're
got 10
paying,
bed, so,
right.
so basically having 20 bedrooms is hardly any different from having 10 bedrooms, is what I would
Correct,
agree.
correct, correct.
But you
Yeah,
are paying kind of double for 20 bedrooms, which instead you could have increased in the stock market.
correct, correct, correct. Yes.
So when that marginal utility hits basically of the house, essentially,
Hmm. Hmm.
when there are grounds, let's say tennis pool, tennis and swimming pool, etc. in the house, basketball
Right,
court, etc. in the house, when the
right.
marginal utility hits basically,
Hmm.
after that there is hardly anything. But the 11th room and the 20th room and the 100th room is not going to add much basically.
Yeah,
Like,
that's just a waste of my or harm.
yeah,
That
that is kind of
opportunity cost.
that is kind of like having a second house basically. So
Yeah,
opportunity cost wastage is happening basically.
correct, correct, correct. Yeah,
So
exactly.
I believe that after savings, the first thing is house. Okay. And
Hmm.
then 5% of portfolio can be given to gold, you can say, just for the sake of leveraging and liquidity, basically, in general.
Right,
And
right.
just like it is kind of slightly non-correlated with the stock market, even though it is overall correlated, but it
Hmm.
is slightly non-correlated. So even if the stock market crashes, maybe gold prices will remain high, basically, like that, basically,
Right.
right?
Got it. Got it. Yeah.
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 So as a percentage wise, do you think that we should include the savings here, or we should exclude the savings and talk 100% as investments that are apart from savings that I mentioned earlier?
No, I think savings is for liquidity, so I think it does make sense to keep it aside. The only
Right.
concern is that I mean some of the numbers, like for me, I know I'm not even close to that.
Correct.
So,
Correct.
like and many folks, if they can't,
Many
uh,
folks aren't close to that, by the way.
many folks don't come close to that. That is something to think about, I guess. That's all.
Yeah.
But I do think it makes sense to keep it aside only. Yeah.
Yeah. So what about real estate, basically? The
Real estate.
private real
So I don't
estate.
know if you remember this. We had this long conversation. So I am a little weird that way. That for me, that
Yeah, yeah, we
hormonal.
had this long conversation that
Yeah,
you
yeah.
don't need to own real estate kind of a thing,
So
basically.
yeah,
Yeah.
because for me that hormone. So, but I totally understand. In many other decisions in life, I do kind of consider the biological with the financial. Everything is not financial, right? It's
Correct.
just that
Correct.
for me, only in the house it doesn't happen. But since it happens for me in other areas, I know that for some
You
things
can
you,
relate. You
yeah,
can
like
relate. No, no, I'm
I
talking
can
about
relate.
is that house a part of the 100% portfolio of investments that we are under?
Like that, no?
That I am talking about, let us say.
No, it's the first house, it's a home, it's for your emotions. So probably not. I would think. Good question. See, from a conservative standpoint, anyway, like I would say that the default is always to assume that you're not including it unless there's a good reason to include it, right? Because it's best to like not consider it. That is just a house. It is for peace of mind. The liquidity is for peace of mind. To keep that aside and look at everything that's after that as your portfolio, which you're fully looking to optimize. So that's the way I would see it too. I guess because other things have that utility of the peace of mind also. So you're not only looking to optimize. So it makes more sense to kind of keep them aside and look at whatever we are going to optimize, which is like after liquidity and after the real estate. So I would also think that.
So
So I
you
think
are
you were
saying something,
asking.
you are on a rant. Basically, I might have missed the last 10 seconds of it.
Oh, okay, okay, fine. Huh. So I think now, and I had some time to think about it now. Also, I think there are multiple reasons to not include the house in
In the
the
investment
portfolio.
portfolio, right?
Yeah.
Basically.
One is that it's actually a consumption thing because we are consuming it for our hormones, right? We're getting
Right.
utility, that peace of mind. We are living in it. So we're not fully like it's
I
not.
am,
It
I
doesn't
am,
form.
I am personally okay either way, basically, right? Because ultimately, I know that that house is not playing a part in the portfolio as such that is going up. Because
Hmm.
whatever
Hmm.
money you are investing in gold and stock market ultimately, and
Hmm.
real estate in which you are not living, is the thing that is kind of varying, right? Basically. So let
Hmm.
us say
Hmm.
your house cost, you bought it for whatever X, like for example that family, my relatives, they bought it for 20L. It now
Hmm.
cost 1.6 cr, but they are still living in it, right? So they have
Exactly. Yeah, yeah, that too.
they are not
Yeah.
able to realize the gains, basically. That's the
Correct,
thing.
correct, correct. Exactly. Yeah. That should be one of the key criteria. Like if you're looking at a portfolio, then you should be able to realize the game. But that is why I thought that even other house anyway, anyway, according to you, we shouldn't buy a second house also, according to me also. So that's
But
not a
let us say
problem, but
somebody, if somebody does buy it, and then that can be considered in the investment portfolio if they are
it
willing
can
to
be.
sell it, basically.
Correct, correct. But then I think I would, if I did that, I would probably put a lot of margin of safety, because whenever you decide to sell, you never get what you think it is valued at and all that. So
Right, right,
you
right,
never really know the market price. At least with equity, you know exactly what it is, so it's easily measurable. And if it says 1,000 rupees the stock can be sold, I can sell it at exactly 1,000.
right,
But
right. And it's much more liquid also. You can sell part
yeah,
of the equity, etc.
correct, correct, correct. That also. So for those reasons, yeah.
So basically, we are thinking that not to include the real estate
Hmm.
in the
Hmm.
investment portfolio, at least the
I think
primary
so.
real estate, at least the
Yes,
primary real estate.
yes, yes, yes,
So
yes.
now, according to our financial thinking that we are
Hmm.
kind of putting out there on the table, we are not
Hmm.
including the savings slash FD that are
Correct,
varying age wise, basically. That is just
correct,
giving liquidity to the person, right?
correct, correct, correct.
And
Yeah.
then we are not including the primary house also,
Correct,
basically,
correct. Exactly.
right?
Just like they say, I mean, just like we start with
Then
insurance, right? Like, so like that insurance, then savings, then house, and yeah. So none of them are in the portfolio, right?
insurance, savings, and house, although they do add financial stability and hormonal
Hmm.
cocktail value, basically,
Correct, correct, correct,
they do
correct.
have the emoti graph value and hormonal cocktail value and financial stability. It's not
Yes,
really wealth that is ascending because of wealth working for itself, basically. Like it's
yes,
not really wealth that is ascending because of money working for money.
yes. Well
And
put.
that
Yes, correct.
and that's why we are not choosing it to
Yes,
include it, basically.
yes, yes, yes.
So then if we leave aside these things, then we are just including gold and equity investments and investments in our own startup in the 100%, basically, so as to,
Correct, correct,
right?
correct.
So
Yes,
then, in my opinion, then gold should be less than 2% or maximum should
right,
be 2%, basically.
right, right. Yeah.
And then you can say here there is a risk appetite graph, basically,
Hmm.
wherein
Hmm.
which at earlier ages you can invest more in your own startup and
Hmm.
on, let us say, relatively risky bets in the stock market, but not as risky as Bitcoin or something like that, basically, not as risky as crypto, or rather to say, rather than to use the word risky, as volatile as crypto, basically, so as to say.
Right, right. Yes, yes.
So, because that does not have intrinsic value of its own, right? Basically.
Yeah, yeah.
So,
Correct.
cryptocurrencies by intrinsic value don't govern the energy flux, please understand, like businesses do. Businesses
Hmm.
intrinsically govern the energy flux from physics, basically. Right?
Correct, correct. Yeah, correct, correct.
Cryptocurrencies intrinsically don't do it, basically. So, they
Hmm.
have ascribed or attributed value, basically. They don't
Yes,
have a real value.
correct.
It's like social status. Social status is not a real thing. It is
Yeah.
ascribed to other individuals by some human individuals, basically. Right?
Yes, yes.
The
Correct, correct,
moment that goes away, the entire premise collapses, basically.
correct.
Premise collapses.
Yes, yes.
But it's not like this with respect to real and true genuine businesses. It's not like that.
Yeah.
Like real and true genuine businesses do add real and true genuine value
Value,
in the
huh?
lives of everybody involved, like employees, customers, everybody, basically. So
Correct.
it's like employees and customers and vendors are conspiring to kind of withdraw more of the energy flux and utilize it amongst themselves when a business succeeds, basically. See,
Hmm. Hmm.
employees, vendors, customers, founders are
Huh.
kind of dipping into the energy flux that is coming out of Earth, basically. Think of
Right. Right. Okay, okay, okay. Right.
when the business succeeds. So I am
Yeah.
aligned with the thinking wherein which we are not including savings and basic real
Hmm.
estate, like the primary real estate, as a part of your. Okay, it can still be included in the net worth, but we are not including it in the portfolio that we are trying to analyze or we
Yes,
are trying
yes.
to grow. We are trying to grow, basically. Okay.
Yeah, yeah.
So the 2% to 3% to maximum should be 4%, but then 4% also I would recommend is a bad idea of gold and precious
Hmm.
metal is what I would say. See, again, here also we have to think that I behave and give out morphemes and heuristics according to the way in which my brain works. For somebody else, they might be more
Hmm.
secure with gold and wouldn't care about a lower return
Correct,
on
correct,
their investment, basically, right? Basically.
correct. Yeah,
So
yeah.
I am talking obviously about somebody who thinks like me, who is confident of gaining a higher return by going into the market than what gold would typically give over the long run, basically, right?
Right, right, right.
So for somebody like me, 2% in gold, and now we have the remaining 98%. All right. So now the split has to be decided between our own startups slash companies, wherein which we own 100% of the equity or close to it, but have very little market share, versus
Hmm.
other companies in the publicly listed or private equity stock, private
Yeah.
equity investment opportunities that are thrown your way. Like for example, last week one. Marathi film producer approached me, and he
Okay.
was asking for around 35 to 40 lakh rupees for his
Okay.
project, basically. That is going to cost 3 to 4 CR. So they are going
Acha.
to fly to Europe and shoot and things like that. So such
Acha.
investment opportunities keep getting thrown your way, basically. So
Okay. Okay. Okay.
when you have little excess capital, etc., this thing
Acha.
keeps
Right.
happening. This such
Right.
thing keeps
Right.
happening, essentially.
Right.
So, so it's like many balls get thrown your way. It is your decision which of the balls to strike and which of the balls to not strike. That
Right.
literally is true. So we would like to hit home runs on those 20 balls, basically. Think like that. In
Right.
the in the long run, see, trading is a
Correct.
profession, like how teaching is a profession. Trading
Right.
is a profession. It's like how digital marketing is a profession or something like that, basically, right?
Right.
So
Right.
in trading, you sit in front of the computer and make daily trade profits and losses, basically. So
Correct.
trading and short-term things are different from long-term investment things.
Yeah.
In
Yeah.
long-term investments, you look at value and valuation and all these considerations of, you know, long-term competitive advantage or moat or long-term viability, business viability, starting
Correct.
with forensic accounting and then management and then price, basically, right? And government thinking, basically, in cahoots
No,
with the
forensic
government.
accounting is acha,
Primary,
just to
primary.
let you
That is
know.
primary.
I mean, it's equivalent to finding out whether there's financial issue. I don't know
Yeah,
what
yeah, yeah. Forensic, yeah, yeah,
term.
yeah, yeah. Exactly, exactly. Term
Okay.
wise, term
Oh, so
wise,
is there a
forensic.
discipline to do? Okay, basically, would you suggest I kind of check out the book and
You should, 100%
right,
you
right, right.
should and yeah, and just Google this forensic accounting. Just Google this term, forensic accounting.
Yeah, one second.
Forensic
Foreign
accounting. You can just Google it.
accounting. Huh.
Yeah.
Detection, prevention. Okay, so detection. I always thought that it came only after the financial crime, but I didn't know that. Okay, so probably
Detection and
detection
prevention. Yeah,
also. Detection, prevention also. Right,
yeah.
right, right.
So it is kind of like akin with the term financial shenanigans, basically. Like basic
Correct,
or
correct. Makes
some.
sense. Yeah,
Yeah.
yeah.
So at least see with the brain power that we are deploying on this problem, we are at least hitting the most correct methods of thinking, basically.
Yes,
So
yes. Right.
in only a couple of weeks, we were able to come down to the set of principles that we are going to use to invest
Hmm.
in long-term companies. And we were
Correct.
able to understand that we need to find only around 20 stocks out of the 50 that might exist, basically,
Right.
with whatever analytical skill sets that we have. And guess what? We can just find the stocks and list them out for ourselves. Okay.
Hmm. Hmm.
And then wait for the market to go down, basically,
Yes,
for us
yes.
to buy.
Correct, correct, correct. Yeah,
Got it, no?
yeah. Absolutely. Yeah.
Yeah. So that makes a lot of sense, actually. Yeah. All right.
Yeah. Right.
Yeah.
Mm-hmm.
Yeah. Yeah. So what was I saying before this?
So forensic account. Are you? I think we listing down the
Yeah,
things that.
no, we were doing that portfolio thing, wherein which I was saying
Ah, ah,
100% if it is, let's say 100% is portfolio that you are trying to use for the sake of wealth ascension, then out of that maximum 2% should be gold, and then you are left with 98%.
yeah.
Now you have got from age 20 to age, let us say 80, let us say, all right. So
Mm-hmm.
from age 20, let's start at age 20, okay. So at age 20, what should be your split between, you have got 98% now, right? For
Yeah.
the ascension, financially ascending portfolio. So
Yeah.
what should be your split at age 20 in between your own startups versus equity, private or public equity,
Okay.
basically.
Okay. Okay.
Interesting question, basically, right?
Yeah.
I think it should be 90% for your own startups and
Hmm.
8% for equity, others equity, basically.
Is that
Because
because?
you need to believe in yourself as an
Hmm.
entrepreneur, right? Basically, more
Hmm.
than you believe in the market, so as to say, in
Right.
general.
And in like, I mean, is it also like, I mean, that's the way I was thinking ki, in
Hmm.
your own startup, even if you lose financially, but you
You gain,
gain in terms of skill and
lots of experience, lots of
right,
networks, contacts, career ascension, experience, etc., insights,
right,
etc., etc., etc.
right, right.
And as the age progresses, if
Hmm.
the startup is doing well, then have large chunks of your wealth in your startup, which hopefully will become a public limited company at one point in time in the future.
Right,
But
right.
if that is not happening, then kind of shift towards, instead of 90% being in your own startup, towards 10% being in your own startup and
Hmm.
90 or 88%, whatever it is, basically
Correct,
being
correct.
in the public stock market at age 80, basically. So you can
Right.
kind of shift the proportions. I
Hmm.
always, at all times, I believe that only 2% should be in gold, not much more,
Good. Yeah.
basically.
Right,
Yeah.
right.
because
Correct.
yeah, that's it. Like that's like liquid leverage basically, quick liquid
Yeah.
leverage. So
Right.
it will take time to mortgage your house and things like that. In
Yeah.
for with respect to gold, you can just go and take the money in half an hour or 1 hour basically,
Yeah.
mortgage the amount
Right.
basically.
Right. Right.
Uh,
Correct. Yeah.
something like that.
Yeah.
So
Yeah.
yeah,
Mm.
of course, if some people want more security, then they can have higher percentage of gold in this portfolio. All right.
Mm, mm. Right. Right.
So as the age increases, more should go towards public equity,
Yeah.
right? And
Mm,
anyway,
mm.
even if your startup succeeds, then also you want to diversify, right? So
Yeah. Yeah. Correct.
you will be investing in public equity, higher amounts of your profits from the startup, basically.
Yeah. Yeah.
Higher amounts of your profits from the
From the
startup,
startup into the equity. Correct. To diversify. Correct.
in order to diversify.
Yeah.
But
Yeah.
what would be the percentages that we exactly can't say? That can't say,
Mm,
depends upon the life situation and the extent of startup success basically, because
mm,
let us say
mm,
your startup succeeds a lot and then you have got a lot of cash floating around, then also
mm.
has to be a percentage split between investing in yours or other similar startups as a
Correct.
minor investor, or
Right.
minority
Angel
investor or
investor.
something like that,
Something like that.
versus invested in public equity basically, right?
Right. Oh, yeah, so many factors come into play here. Your own skill and your startup success and your
Correct.
age, risk appetite. So many things.
Correct, correct. But
Right.
as a rule of thumb, at age 20, ninety
Mm.
percent should be in your own things
Right. Right. Correct. Correct.
effectively. See, think about it, because even if you are investing in other startups, those startups now kind of become your own thing, right? Think about it basically, because you are buying early stage equity in another startup.
Hmm. 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 So yeah.
Let us say I have a startup with a couple of people wherein which I own 10% equity basically,
Right. Right.
with three other founders. The CEO owns, I am the CSO, Chief Strategy Officer, kind of
Right.
a thing. And the
Hmm.
CEO owns 70%, and there are three of us, like
Yeah.
we own 10% each, basically, right?
Right. Right.
So essentially, think about it. Now that thing becomes my entity, right? That company
Hmm.
becomes. So this comes in that 90% of my entities, basically.
Correct. Correct. Yeah.
Got
Yeah.
it now?
Yeah.
So if you are investing in startups, they are kind of your entities.
Entity.
So
Yeah.
if you still think about it, it's just that split only. Whatever, see, we are
Oh,
talking
with
about
public.
percent.
Right.
Yeah, we
Right.
are talking about percentages. So even if your startup succeeds, basically, right,
Yeah.
then
Yeah.
that successful money or extra money that you are
Hmm.
investing, then that also percentage wise, some will go to new startups, which are kind of your entities, and some will go to the market, right, which is
Right.
equity
Right.
market. So
Right.
again, the split is just how you split 98%. And I think we
Correct.
have a good rule of thumb, so as to say, wherein which for that particular age, from like at age 20, you should have kind of 90% in your own startups, like the
Hmm.
people who follow our kind of philosophy, who are
Right.
go-getters and try to control their destiny and try to always self-improve, etc., etc. And then at age
Right.
80 or at age 90, it should be the other way around. At age 80, just to be symmetric, because we started with 20, assuming
Right.
a 100-year lifespan, at
Hmm.
age 80, it should be the other way around, meaning 90% of your net worth, 88 to 90% of your net worth,
Hmm.
that is in your portfolio, not including your own house or FDs, etc. So
Right.
88 to 90% of your net worth should be in equity. That means you should have diversified in those 20 companies rather than your only one single company, basically, or
Right.
your not only one single, but okay, X number of n number of companies of yours. Let's say 5 or 10 companies of yours, basically. So
Mm-hmm.
remaining
Yeah.
would be the 10 companies. Now, guess what? Microsoft is a Bill Gates company, but then later it is also not a Bill Gates company. So
Mm,
the moment you stop becoming actively participating in your own businesses, they come into that passive category. So your own business can also behave like a or be like a equity investment for you,
yeah.
basically.
Yeah. Correct.
Later, when you kind of hand over the reins of management to somebody else, so as to say,
Right. Right.
correct? So
Yeah.
we have now sufficiently developed appropriate philosophy as to
Hmm.
how to go about things, right?
Right.
Basically.
Yeah.
So
Yeah.
as value investors, so we will talk as traders later, but as value
Yeah.
investor, our
Hmm.
job is to scan the stock markets of the world and pick the top 20 winners, basically, and just observe them till the price drops, basically.
Correct. Correct. Yeah. Yeah. Yeah.
That kind of a thing. And
Yeah.
as an exception, like Apple like companies, when the price is reasonable, we will buy them, basically.
Yeah. Right.
Even if the price is reasonable, we will buy them if we are bullish on the future and long term returns of such companies and brands,
Right.
basically.
Right. Yeah.
Right? So
Yeah.
does the entire analysis make sense to you, or any doubts or
Yeah.
comments?
No,
Right.
no, it makes sense.
This
Yeah,
is,
makes
this
sense.
is a very good framework. What we established today
Mm. Yeah,
is a very good framework to think
for
about
personal.
financial stability and
Yes,
investment, basically, right?
yes,
So
yes,
now
correct.
what remains to be done subsequently is
Mm.
to go to screener.com, which we will do in subsequent podcast, not today.
Right, right.
Go to screener.com and try to find the 20 winners out of 7,000. There
Yes.
might be 40, 50, or 100, but we are
Mm.
trying to identify 20, basically, something like that.
Got it, got it, got it. Right, right.
Right. And then on every single company from the publicly available data, we will
Mm.
try to go through that checklist that we have. Forensic accounting, yeah, starting with
Yeah,
then long-term business viability, and then after that, modes, and then management, yeah, management modes, etc., in whatever order,
right.
etc. Then price and government sinking, basically. That
Yeah,
one.
correct,
So
correct. Yeah,
this checklist, I think we will write it down and just go through the checklist for all companies, basically. Most companies we will find are overpriced. We might find, basically,
yes,
but
yes.
let us say we find that okay, some companies are extremely well run and they are like
Mm.
they have everything else apart from price. Then those come in our watch list, basically.
Right,
And
correct, correct.
stops because of some black swan event like COVID or something like that, we are going to
Mm.
buy and hold them as long-term investors, basically.
Correct, correct. Exactly. Yes.
Before we end, there is something like the philosophy of selling the stock, basically. So when
Okay.
should we sell the stock, even as value investors, basically?
Right. Correct. That's very important. Yeah.
Particularly, we need to keep we need to keep going through the checklist of everything,
Hmm.
including forensic accounting, whatever six, like I'll not repeat the six things checklist
Right.
now.
Right. Right.
So we need to kind of periodically, even for our own investments, keep a tab on them and go through the checklist of these six
Right.
items,
So that
basically.
to
And if
ensure that
anything,
they are still
yeah,
those conditions are still met. Correct.
exactly. If anything changes drastically, let's say there is
Hmm.
no long-term business viability. Now growth has
Hmm.
been reached, basically. So we invested early, and then now there is no longer further future long-term business
Yes.
viability is not there, basically.
Yes. Yes. Correct.
For example, right?
Yeah.
So
Yeah.
that can be one example wherein which we sell. Another, if some fraud is discovered or something like that, basically.
Hmm.
Okay.
Hmm.
Now I will tell you a very interesting case to sell, basically. Okay.
Okay.
So
Okay.
when COVID happened or COVID news was getting announced, we could sell at a high
Right.
because we know that the same stocks are going to fall, basically.
Correct. Correct. Okay.
And then
Right.
after the fall
Right.
in 1 2 months, the same stock we catch at the bottom, basically.
Right.
So this is a
Right.
very
Right.
interesting strategy that came to my mind, basically.
Okay. Right.
Right. So you could have even gotten the stock at you could have gotten, let's say you have 10 crores invested in one stock. Because of
Hmm.
COVID, the market fell 50%, the stock also fell 50%. Now for the 10 crore amount, you still stay invested because you came out and then went in again. Now you have got double the number of shares, basically, for the same amount.
Hmm. Hmm. Hmm.
Got it. No? So you still believe in the company, you just sell high, let it fall and buy at the bottom, basically.
Correct, correct. But I guess that's still it kind of is a gray area between trading and this, no? Because even though we
Yeah, it's
believe
a
in the
short term
company,
move.
but we are
It's a short term.
short
It's
term,
kind of
we-
it's kind of mixing the short term move with the long term, basically.
right, like we're trying to predict, and if it works out, that yeah, it did fall good, but like I guess in the moment I find it very difficult, no, even with
Yeah,
COVID,
it's very difficult. You need to be on market watch and constant alert, basically. That's the
right,
thing.
right, yeah, yeah. But I got it, like that's an interesting this thing to sell
Yeah,
what we believe
interesting.
in,
Yeah,
yeah, yeah,
interesting theoretical reason to sell, basically.
right,
Maybe
right,
five odd times in our lifetime, we might get this fish, basically.
yeah,
Like we
yeah,
might be able to
correct.
catch this fish.
Correct, correct. So what
For
about Zenith? Then what about the fact that so see the energy crisis will come? How will that affect equity markets as a whole, and will that have a
so essentially, because of that, asset prices will just go down. That's it. And
Achcha.
assets that require a lot of energy. So basically, you need to be invested in electrons rather than atoms, basically. Yeah. Okay.
Yeah, that's
So
a great mental model actually.
yeah. So basically, when you are going to go towards the energy crisis, shift all your investment towards electrons rather than atoms, basically.
Right. Okay. So anyway, that will be captured when we do the future prospects.
Yeah,
Like
future prospect. Exactly correct. Exactly
right.
correct. So
Oh, that
when we
will
are
be.
trying to analyze the business, then
Hmm.
we might also have to think that okay, today we are sitting in 2023. Shall we invest in this business today? And what is the time horizon for the exit that we are looking at, basically?
Yes. Yes. Correct.
Or
Correct. Correct.
sometimes some businesses might be such that we are not looking at an exit there.
Correct, correct, correct. Got it, got it.
Yeah.
Right.
So that some businesses will have the time horizon as infinity, unless obviously
Right.
every year, every 6 months, we are going to go through the checklist and try to understand and analyze the assumptions and check on our own businesses basically, right?
Correct,
And
correct.
if things have significantly changed, then we will change our portfolio
Correct,
and
correct, correct.
accordingly, or sell or buy or etc. Sometimes if
Right,
we believe in the fundamentals of the company, but let us say the stock market says that the price is below expected, then we could buy even more also, basically.
right, right. Correct.
And there is this dicey area wherein which we lack information, basically. So how to make
Mm-hmm.
decisions based upon incomplete information is another very important, because not making decisions also has an opportunity cost associated with it.
Yeah.
Yeah.
Okay. Okay.
So how
Right.
to how to deal with that opportunity cost and how to deal with making of decisions, basically.
Right.
That
Got it. Got it. ठीक है. ठीक है. Done.
are going to make us billionaires potentially, and the bad choices are going to make us zilch or nothing,
Hmm.
basically. So here it's
Hmm.
about decision making. Decision making is the key to choose those right 20 stocks, basically. So
Hmm.
we compared with Peter Lynch, we compared with this fellow like Ray Dalio, etc. You can see that Warren Buffett has done much better, right?
Hmm. Hmm.
So there is this interesting case of George Soros, the mathematician who did the stock market thing. I think his name is George Soros only, right?
अच्छा. Should
So
I Google?
yeah,
I've not heard of this guy. Yeah.
you can Google him basically. So he's a quant trader, I think.
अच्छा. George
Yeah,
Soros.
that's it. Yes, read about him.
So hedge fund tycoon.
Yeah, hedge fund only, no? He has hedge funds basically.
अच्छा. Shorted
Yeah,
the British pound. अच्छा,
yeah,
in
he shorted
92.
the British pound, so it was like a one-time move kind of a thing. And
Okay.
okay,
Okay.
sorry, I said the wrong name. Jim Simmons, I think. Jim Simmons is the mathematician. So George
Jim's.
Soros shorted the British pound successfully.
अच्छा. Jim Simmons, American mathematician.
Yeah, correct. So his portfolio returns, just check Jim Simmons' portfolio return.
He's a mathematician and a hedge fund manager. Okay. Okay. So
Correct.
what is he? His what?
His
Portfolio.
portfolio returns over the long run. Yeah.
अच्छा. What is it
Apparently,
like?
his are much higher than Buffett also, I think. I don't know.
Oh, okay, okay, okay. But it's just okay.
66%. See?
My God, okay. But over what? Over 30, whoa, over 30 years span. That's
Yes.
crazy.
Yes.
It's a trading strategy though. Okay, but still,
So this
wow.
is trading. Okay. And let's look at Rakesh Jhunjhunwala also. Rakesh Jhunjhunwala.
That's crazy, yaar. 66.
Hmm.
Chun, Chunwala.
Okay, just
Whoa,
a
okay.
second. No, no, wait, just a second. 65%. Just wait. Here, wait. The starting amount is 5,000. This is a verbal reporting by Rakesh Jhunjhunwala. It might
Uh,
not be 5,000
okay,
basically.
right, right,
So
right.
that you can just, if the starting amount increases, these returns will suddenly go down a lot
Yeah,
basically.
right, right. Yeah, yeah.
Yeah. Understood.
Makes
So
sense. Makes.
basically, somewhere he has also said that he got 20 lakh rupees, etc., 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 from
Okay.
like friends, father's clients, etc., here and there. So 5,000
Right,
might have been his own amount. And if somebody calculated based upon his own amount and did not calculate the money leverage that he got by
right, right.
investing other people's money, then the calculation might be wrong, basically. That's what I'm
Yeah,
trying.
yeah. Makes sense. Makes sense. Makes sense. Right.
Yeah.
Yeah.
So 65% here is like a question mark, basically. For
Yes.
So, Jim Simmons also will have to go into the numbers actually, because we are just
Mm,
taking the Google result, which is not really a
correct.
very, you know, correct way to do it. So he is
Correct.
basically quant trader. So these are his trading strategies basically. So he
Acha, okay.
developed he developed, I think, trading algorithms with a team of physicists and mathematicians basically,
Acha,
right?
okay, okay,
Right.
okay.
So this has got nothing to do with long-term value investing basically.
Correct, correct. Yeah, yeah.
So this is
That's why they
another
keep mentioning
discussion
trading. Huh?
altogether as to how much
Mm.
percentage of your time should go towards value analysis and how much should go towards
Yes,
short-term trading, basically. And
yes,
in the
yes, correct.
backdrop of your own startups as well, basically, right?
Was
So
that
if
in
you
the?
have got in the backdrop of the fact that you also have your own startups, basically.
Yes, yes, correct,
So
correct. Yes.
startup versus short-term trading versus long-term investing, basically. So
Yes.
this is literally also a consideration, basically, right?
Hmm. Hmm.
think like just pen it down somewhere. Basically, how much time
Yeah.
should go on a daily basis, age wise on a daily basis towards
Yes.
startup. Okay, startups.
So
Okay,
startups.
startups, short term investments like or trades, so as to say,
And say
long term
once
investment,
I'm just writing age
yeah,
wise time split on daily basis. Startups where
startup, short term investment,
and long term investments.
long term investment,
Startup, short term investments, long term investments,
and philanthropy,
philanthropy.
and then finally life also basically. So there is this
Mm.
integrated model of living that I would refer here. So many a
Yeah.
times all these things can happen simultaneously as well. Basically.
Right, right,
All
correct.
these four, five things can happen simultaneously as well. All right.
Right, right.
Philanthropy and life, basically. Life means
So
living life.
once more, just to confirm, I didn't miss anything. Startups,
Startups,
right?
short-term
You own startup.
investments, long-term investments, philanthropy, and life. Five things.
Yeah, yeah, correct, correct, correct. Yeah, yeah.
So kind of
Five things.
time split, how to split the time basically,
Yes, yes,
essentially, on a daily
yes.
basis
Oh.
in these things basically, right? And this
Mm.
is the age wise. This is the age wise consideration. Just like
Yes, age of
your percentage portfolio investment in own startups or own entities versus entities that you don't really control much, basically.
right,
Like for
right.
example, the equity market. So
Mm.
basically, that consideration essentially
Right,
is also
right.
age wise. So this consideration of time spent on a daily basis is also age wise, basically. Okay.
So Zenith, then one question, like, I mean, so when we do this age-wise, there'll be many folks, like me included, who will be kind of falling behind in terms of, say, like how much liquid funds should be there, for example, right? So
Right.
then, I guess the best way to build that runway for your own personal life and then also for your startup, etc., would be to kind of figure out
It's always a
the
high paid
highest
skill
time
set.
for high paid
High,
skills. And so are you still like as the way things are today, is coding still the highest paid skill, or is it something else you think?
yes. Now coding is still very high paid,
Okay.
but you need to now kind of know AI/ML obviously. Right.
Okay, okay,
So
okay, okay.
at least how it works and how it can get integrated into coding workflows. So
Okay.
basically, you now with the leverage of AI/ML can potentially
Hmm.
even do the job of 100 developers alone. Basically,
Oh, okay, okay, okay. Got it,
so
got it, got
you need to. So basically, what is happening is all the
it. Hmm.
easy stuff is getting automated out. Basically,
Got it. Arey,
the
that's good.
hard
That's
and
good for,
creative stuff is
yeah.
still hard and creative. Basically,
I guess that's good for guys like you and I, right? I mean, or anybody
it's good
who's
for us.
cognitively skilled, I guess is good then. Okay.
Yeah. So cognitively skilled people are ascending. Basically,
Hmm. I guess like in any field, it's like the more skilled people will take more of the spoils. I guess something like that here also
something
then.
like that is there. Yes, of course. The more
Hmm.
skilled people as well as the lucky people will take more of the
Lucky
spoil.
people, correct, yeah. Pareto distribute more and
The
more
Pareto
skewed, yeah.
will get skewed towards lucky and more skilled. Basically.
Lucky and lucky or skill, whatever that, yeah, yeah.
Yeah. All right.
Hmm.
So this quant trading strategies etc. We'll get back to later or from a physics
Okay,
perspective because
sure,
this
sure.
comes in short term thinking basically, right?
Right, correct,
So
correct,
currently
correct,
we are discussing value investments, which is long term thinking. So long
correct,
term
correct.
by long term I mean three again
Three, six.
long L yeah L1 means 6 months around 6 months to 1 year. L2
Hmm.
long term two thinking means around 3 years horizon time or 3 to 5 years, and long term three means 10 years horizon 8, 10, 12 years
Okay,
etc.
okay, okay, okay. Sure, sure.
Like we aforementioned this also. All right.
Yeah.
So, so when to sell is also an important consideration, and the time
Yes,
split is also an important. The time split, age
yes.
wise, on various different
Age-based time.
activities that are related to money earning, basically, right?
Yes, yes.
So
Some
that time split
posting
is
comments
also
like that.
some consideration, basically, right?
Yes, yes.
Ultimately.
Yeah.
All right. Fine. So now from next time onwards, what we will do is analyze the stock markets of the entire world and try to pick out companies
Hmm.
around 20, 30 companies, etc., that seem
Hmm.
to be the winners of that, a group of companies, let's say. So you can say
Got
that USA
it.
has around 4,500. So again, there will be around 50. The other 4,500, around 4,000 will be accounting fraudsters, basically, right? Who are
Oh, so we're looking globally, eh? Oh, I thought only
so
India or
first
something. Okay.
we'll start with India, then we'll go to
Right.
USA, and then we'll go to
Got
pretty much. all major stock exchanges of the world, right? Basically.
got it. ठीक है,
And
right.
then we also have to, we also have to deal with the available information basically, because not all
Yeah,
information is available to us, no, basically.
true, true, true. Yes.
So how we will deal with the information that is available to us, that also we
Hmm.
will develop mental models in thinking about that, essentially.
Correct. Right.
The idea here is to develop mental models, basically identify companies and give some time to identify companies as we proceed in life also. But it is, if you think about it,
Hmm.
one good news is that it is kind of more like a one-time activity to identify
Yeah,
uh,
yeah, correct.
at least one-time activity in a decade, you can say, basically. So
Yeah.
the winners by definition are long-term winners, essentially. So they might change only
Hmm.
once in a decade, or maybe,
Correct.
the real winners might change once in 20 years or something like that. So if
Yeah,
you
at
have
least we
got
can
some
say at the maintenance effort of updating it will be lesser than
lesser, yes.
kind of doing it from scratch, maybe. Yeah.
The maintenance effort of updating it is only 10% compared to
Hmm.
getting the first set of winners, basically.
Yes,
That way.
yes,
And
correct.
again, a
Yes,
good business can be bad investment, bad business can be good investment, good business can
yes,
be good investment, and bad business can be bad investment also, basically. So
correct.
anything can happen, basically, here.
Right.
Here, anything can happen. And when we
Yeah.
look at taking a position, basically, with respect to a stock, then we also have to mentally think about when are we going to exit. Under what conditions
Yes.
are we going to exit? When is the
Yeah.
sale going to happen? Are we thinking short term with respect to this stock or long term? So this is where a lot of mental agility kicks in, basically.
Right.
Then
Yeah.
how is this being analyzed with the backdrop of you have got only so many hours in a day? So how many hours are you going to go to stock market analysis? How many to your own startup? How many to
Hmm.
other things, etc., etc., etc. Right?
Right. Correct.
All these require mental models, otherwise they'll confuse humans, basically. Right?
Yeah, correct.
So we have
Correct.
done a very good job so far in describing what mental models will be applicable and useful for various
Yeah.
different companies. So from
Yeah.
next time onwards, what we will do is we will
Hmm.
start analyzing with the Indian stock market and try to peg down these 10-20 companies that we feel are kind of the winners of the Indian stock market. By winners, I don't mean according to price considerations. I mean
Yes.
winners as a business, basically, right?
Correct.
So
Yeah.
a business that is a winner as a business, that means it's an ethical business. It is
Hmm.
increasing ROC, return on capital investment is increasing. It's an ethical business. It's an expanding business. There is scope in the future for further expansion. The time has not been reached, or even close to the time has not been reached,
Right.
basically. So
Yeah.
something like that and stuff like that, right?
Yeah.
Essentially.
Yeah.
So the idea is, and the point is that we need to kind of go through the checklist of all those 6 points, and we need to identify the winners of the Indian stock market and then see whether we want to invest right now or just wait for some price drop or something like that. And this
Hmm.
all in the backdrop context of investing in our own startups, investing time in analyzing and operating our own startups, basically, as well as
Correct.
time in developing high paid skill sets and
Yeah. Oh, yeah.
increasing income with respect to those, basically, right?
Right. Right.
This
Yeah.
way. So whatever are the best laid models with respect to this, we will be laying out in the upcoming few sessions. And I
ठीक
think
है.
in the next session, we might start analyzing equity, basically. So at least we will be
Okay.
able to identify the winners. So let us say we are spending a sum total of 100 hours to identify the winners, for example, 20 winners. Then in the
Hmm.
next decade, we might require only 10-20 hours, basically.
Right. Correct. Yeah.
Every decade I'm talking about. So 10-20 hours in a decade is not a
Yeah.
bad deal to identify the
Absolutely. Yeah.
once the winners are identified, the only thing that remains, okay, the only thing that remains is to wait for the price to
Price
fall
to
down.
drop. Yeah.
Yeah. And if there are some brand businesses that you have lot of confidence in, then Charlie Bunker has advised to even buy them, yeah, at relatively high prices. Not
Right.
extremely high, but relatively okay prices. Like what
Hmm.
you wouldn't consider cheap type of prices, basically.
Right.
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 Yeah. So all of the thing that I talked about right now is in the backdrop of long-term investment. We will have a completely 100% separate conversation about trading, basically.
Right. Sure. Okay. Cool.
All right, good. So next time
Cool.
onwards, we will start analyzing companies. Okay. So
Okay.
let's
Sure.
kind of fixate upon some companies that we will analyze. Okay. So
Okay.
banks and financial institutions are typically very difficult to analyze at the start. So
Okay. Right.
what we will do is let's do two companies. Just write them down. One is Asian Paints,
Hmm.
Asian. Yeah, this is a
Yeah.
well-known brand basically, and like there is a lot of positive craze about the stock.
Yes, yes,
Okay.
that's true. Yeah.
Another one that we'll analyze is Infosys.
Infosys and Asian Paints.
And Infosys, Asian Paints. These two though
Right.
definitely will analyze. And the third one is called Alkyl Amines basically. Alkyl Amines.
Okay.
Alkyl Amines.
I mean, yeah, I think I've heard of it also. Yeah, correct.
So let's try to analyze these three stocks basically.
Hmm.
Later after 2 3 sessions we'll start analyzing banks basically. Right.
Sure, sure.
But let us start with these 2 3 stocks basically in the next session. I think
Right.
Thursday, right? Thursday.
Thursday, huh. Right.
Try for okay.
So
We'll
Zenith,
try for two. Huh.
we'll do Thursday because Sunday might be tough again.
Might be
But
tough. Okay.
actually, soon we'll have to kind of change this whole routine also because if
Correct.
my full
Because
time
the
job
job start. Yeah,
kind of
yeah.
kicks
We
in,
will see how we'll adjust. No problem. No problem. Right.
we'll figure that out. Okay,
Yeah,
so
we'll
I was
figure
thinking
that.
of kind of talking to Vishap also.
Yeah.
Um,
Yeah. You can just put it off the record now. Basically,
oh
you
yeah,
can
sure,
stop.
sure.
You can stop recording.
Cool. I'll stop recording now. No, one second.
Yeah.
So, okay, these three have sent Infosys, Asian Paints, and Alkylamines, and we'll do that next time.
So basically, now what I will do is I will also start reading more upon them and thinking more upon them basically because now we
Right,
are
right.
focusing upon
Or
companies. So
do you want to start thinking about since one of the aspects is the long-term viability of the product, so then that
Mhm.
we can do at an industry level also, no? That what industries are
That we can do at an industry level also. That does not need to be at a company level per se
So
specifically.
then, if you want to kind of think of some industries which you believe will last, then maybe after that, then we can try to find the winners in that. Like we could take that strategy also, that approach also.
That strategy is like the I think top down strategy it is called
Top down,
basically. So
correct, correct,
just
yeah.
Google right now top down strategy versus bottom up strategy basically.
Top
Top
down.
strategy versus bottom up in stock market investing. In stock market investing.
Mm-hmm. Top down looks at big picture economic
So what
factors.
you said is the top down strategy. So
Correct,
we will
correct.
have a separate conversation about top down strategy basically.
Okay,
So
okay, right,
right, start with bottom up, like take some companies and see whether they are winners or not. Because
right,
the three companies that I told you about, now my suspicion is that they are winners basically.
right. Okay, right.
Fourth one is HDFC Bank. That's why I'm talking about this. You can
I'm
even
sorry.
write down. You
Ah,
can even write down about HDFC Bank there.
right.
We will not talk about it in the next podcast. We'll talk about it subsequently. Next
Right.
podcast, may like at least Asian Paints and Alkalamines we need to get through basically like that.
Yes, yes, correct, correct. Yes, yes.
Right.
Cool, bro. Chalo, so we'll do this next time then on Thursday.
Emerging from here. So I think we should note them down. One is like we should separately talk about short-term and trading strategies completely separately, right?
Yeah, yeah,
Completely separately talk about short-term and trading strategies. One is
yeah.
talking about you must have written that down maybe talking about time spent age-wise, time
Yes, that
spent
I've
in
written
those
only.
funds. Yeah. So that is one thing basically, and yeah, top-down versus bottom-up strategy is a third conversation, right? Top-down versus
Okay.
bottom-up.
Yeah, yeah, yeah,
That is another third conversation. So you are
yeah.
recommending the top-down strategy. You are thinking like globally first, and I also generally am of that opinion only. So we will be definitely doing that. But I think these are like winner companies. So I want us
Hmm.
to get habituated to going into screener and starting to read annual reports and
Makes sense, makes sense.
thinking out specific companies basically, thinking out specific companies that way. All right.
Right, right.
So any
Yeah,
other
yeah, right.
conversational
Yeah.
thread that I am missing that had emerged from this some time ago? Is there any other
Uh,
conversation?
no, I think we're good. I think we have a good plan also ahead.
And no, one thing is like okay, that every single company will get analyzed in the context of the carbon pulse getting over and hence we
Yes,
shifting
yes,
to electron based brands
correct, correct.
basically rather than atoms based brands. So you can just
That.
write that thing down also like carbon pulse because that is a huge phenomena for humanity, right? The population going down from 8 9
Mhm.
billion to 2
So
3
yes,
billion
we
like
can
is a
spend
huge
some time talking about what you understand about that also, especially regarding
correct,
timelines and all, like
correct. The
And
timelines can't be predicted. It's going to be somewhere between 2030 and 2040, basically. That much
Acha, okay,
I
okay.
have good, like the Alpha 90 plus about, basically.
Okay, 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 okay. Hmm.
So the petroleum car that you will buy now in
Hmm.
2023 and use for
Hmm.
15 years would be the last one of its kind.
Right, right.
That doesn't mean we should buy BMW then. Yeah. So the car that
Right,
is bought now will be the last one, essentially.
right, right, right.
Hmm.
Okay. I'll just
And
put this on Telegram. Huh? Yeah.
yeah, yeah. And psychologically, like how to manage the psychology when the stock market is going up and down, etc., etc.
Hmm. Oh, behavioral like trading.
Behavioral
Psychology.
considerations and also when to sell. Somewhere like we have to elaborate upon in detail about when to sell, basically with examples, right? In fact,
Okay.
when to sell can be a completely separate podcast, basically. When to sell
Oh, wow. Okay, okay, okay. Because I'm
can
noting
be a
down all those. Okay,
100%.
when to
Yeah,
sell.
when to sell can be a 100% separate podcast, and one
Okay.
complete separate podcast or even multiple separate podcasts can be about Warren Buffett alone, basically,
On
and
Warren Buffett.
analyzing Warren Buffett alone and analyzing all his investments, basically, and the reasoning behind them, basically. So as to say,
Got it, got it, got it. Right, right, right.
right? So much
Behavior.
syllabus is there over here, right?
Yes, yes.
And let me tell you one thing, that this is not even the juicy part of our conversations, basically. The juicy part is going to come when we talk about startups and how to make startups scale and succeed, basically.
Mm-hmm.
That way. So I still believe, and you will also agree that, see, Bill Gates at age 60 had much more wealth than Warren Buffett at age 94, 92.
Okay, okay,
And,
right.
and we all know that most of Warren Buffett's wealth has compounded in the last 30 years of his life.
Yes, yes, correct, correct.
So Bill Gates is a startup founder. Warren Buffett is
Mm.
a investor.
Investing. Right.
So investment portfolio grows much more than salary, like we have seen, much more than cash in the bank, because cash in the bank is as negative return. Basically,
Mm.
it goes down
Mm.
with time. Okay,
Right.
investment portfolio grows much more than salary or cash in the bank or gold or even primary real estate also, like we saw, but it
Mm.
grows much lesser than startup. Think,
Mm-hmm. Okay.
right? So to become a
Right.
successful startup founder is the kind of name of the game, basically, so as to say.
Right. Got it. Got it.
And
Right. That I
and then
yeah,
what are the mental models around that, basically?
makes sense. Makes it does make sense because startups are the ones that accelerates
Assign, yeah,
the flux
correct.
the fastest
Yeah,
rate, right? So
yeah, correct, correct, correct. You can say they claim the flux the fastest, basically.
fastest. Yeah. 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 Yeah.
They lay your claim on the flux the fastest, basically.
Yes. Yes.
But then
Correct.
again, 99% of startups fail also, think.
Fail also. Correct. Correct. Yeah.
Right. It's kind of like a trading strategy. Like if you succeed big quickly, and
Hmm.
if you fail, then you might fail, or there will be the opportunity cost with respect to it.
Right. Right. Correct.
So in trading, the opportunity cost is lost capital. In startup, the opportunity cost is lost time.
Lost time. Got it. Got it. Right. Got it.
Yeah, so you need a lot of technique in order to do it predictably and successfully. Random
Yes.
flukes can happen here and there, basically. But in
Yes.
order to
Yes.
do it predictably and successfully, you need a lot of patience and time. And okay, and there is
Hmm.
still a lot of randomness that is there at play even
Hmm.
in the world of startups as well, right? That way.
Right. Yeah. Yeah.
Yeah, yeah. I think we are doing a good job even at listing out
Hmm.
the future talking points or talking podcasts. Basically, I think you have listed on everything that we talked about, right?
Yeah, yeah. On
Yeah,
Telegram, it's there now. So in the group,
Pretty,
yeah,
pretty much. Yeah, good, good,
yeah,
good.
yeah, yeah.
So this is
Cool.
this is becoming a very good knowledge base. Actually, I am liking it.
Right. Nice. Yeah. Yeah,
And one odd
definitely.
time we
Very
might have such,
comprehensive.
yeah,
Hmm.
very comprehensive and most importantly, most accurate. Like whatever,
Hmm.
see, randomness always plays a part. It might so happen that despite so much thinking and analysis, our portfolio might return only 30 or 40%. It might not reach 60% or something like that. But then the
Hmm.
person who reached 60% might be randomly lucky also. We don't know. Like for
Correct.
example,
Correct.
lottery winners reached some 10,000% also, basically. Like,
Yes. Yes. Right.
like higher percentage doesn't necessarily imply skill.
Skill.
Doesn't
Absolutely.
necessarily imply.
Absolutely. Yeah. Yeah. Yeah.
It
Yeah.
might imply luck as well. So we are
Correct.
trying to maximize the role of skill and minimize the role of luck, and that is
Yeah.
the consequence of our efforts, basically.
Yes, yes, correct,
Now,
correct.
now before ending, I would like to say one thing. All right.
Hmm. Hmm.
Putting in active effort may
Hmm.
give you no returns, nil returns, but without putting in active effort, you will never have high
Hmm.
returns. Please understand.
Right, correct, correct. Yeah,
Putting in active efforts carries with it the risk of you having no returns. This is true in startup. This is true in stock market investments or even
right,
negative returns. So putting in
right.
active effort may give you nil or negative returns also in the short run, right?
Hmm. Hmm.
But in the
Hmm.
long
Correct.
run, without putting in active efforts, there is no upside basically.
Yeah, yeah,
And when I
correct.
say active efforts, I mean let's say in trading or let's say in your startup own startup or let us say
Right,
in even analyzing long-term value stocks basically.
right, right.
Correct.
Correct.
So,
Yeah.
so active effort should be used, but you have to think that okay, they might not yield anything, but you are hoping that they will yield something. So this is the mental
Yes,
model. So
yes,
for that,
yes.
you need to have that runway and base stability, right? So that
Hmm.
savings
Correct.
now plays a part there basically, because even if your active effort are not going to yield great results in the future, that runway will still keep you stable. Runway and a house over your head will keep you
Hmm.
financially and mentally stable, basically. That way.
Right, right. Correct, correct,
Make sense?
correct.
So this
Yeah,
is another very important mental model philosophy to inculcate. Anyway, everything is getting transcribed. We'll properly document it also, basically,
yeah,
right?
sure.
And make it
Right.
like a course or study material kind of a thing, basically,
Yeah, yeah,
which can be discussed also amongst peers and groups of students and things like that, basically,
yeah,
right?
yeah. Cool, cool. Makes sense. Yeah.
Make sense? Yeah. Okay. So I'll hang up for now and I'll send the audio recording.
Okay, sure.
Right?
Great. Okay,
Yeah.
so see you then.
Yeah.
Yeah. Bye.
Bye. Take care. Take
Bye.
care.
You
Bye.
too. Bye.